Yeah, so I'm thinking precious metals may be the next move up here. Markets hitting new highs, but of course, massive sort of money printing, but not really money printing in their words at the bigger level. So high quality names will go up, and what else?
I see you got some interesting stocks. I actually bought Twitter and Intel and Comcast and Amazon, a bunch of them.
Yeah.
And
So
very fascinating, the results.
yeah, Twitter. I mean, Twitter. The results were good, but the markets didn't react well to it. So
Well, they missed their numbers though, right? So the stock was down 20%. So the question is that if you really think they did well, 17% growth.
yeah,
Is it an overreaction to the, to the to the analysts overall?
Yeah.
25% drop or so. Is that an overreaction?
you're talking about the actual move over here.
Yeah.
I mean, what's your take on earnings? Like, I looked at it. I looked at the numbers. I don't see. I mean, I'm okay at buying at these, multiples, this valuation in this market. Now it looks even more attractive to me. I have a longer term view on this one because I know it's only 23 billion for what it's doing. Understanding the marketplace, it's mostly an international market. We could look at some of the numbers.
I thought it was pretty crazy that they gained users, but they still lost. They had declining revenues.
Yeah, so from a software analyst perspective, right? Them gaining users is a good thing to me because that's how it kind of compounds and then increase that value. But the way the markets reacted was not what you'd think. So what they actually had was 17% user growth. Monetizable daily active users is what they call it.
How do they make money on that?
It's the same model as Facebook.
How?
So, for example, they are basically an advertisement platform, meaning guys like me or money managers or Trump will start tweeting.
Right.
And so that creates viewers, right? And those viewers will view our tweets, but then they will implement ads in there. So the ads are paid by the other side, which is the producer side.
It's funny because when I use Twitter on my iPhone, I don't ever see ads. I never see ads.
Oh, then they're pretty good at making it invisible.
Make it invisible? You mean they're taking what I'm doing and using other?
No. In terms of like so when you do a Google search, right? Let's just say like Apple stock, right here.
Right.
You go down and you probably see some sponsored content somewhere. Well, I guess you don't see it these days. I don't even notice anymore. Right here. So I'm pretty sure they probably pay for this position, or maybe not. Before, when they used to have like sponsored content, that's how they would make money.
No, Facebook, you see ads all the time, right?
Yeah.
Some are actually
Yeah.
for products. that you might actually
Twitter,
buy.
there are. You just have to spot it. All right, let me spot one just for the sake of let's see. So this is my own Twitter feed, right? Let's see. You scroll long enough, you'll see something.
Yeah, it just seems fairly insignificant, the amount of ads in this overall.
Yeah. So they could ramp up ads, and that make it more dynamic, but overall, probably not.
Is that like a bullish sign? That they have a lot of room for revenue growth since they don't even have ads.
Well, I think it's relative. So this is my take on it, right? It's a relatively
Use it.
well-priced security, meaning it's not overvalued. I don't think it's undervalued either. It doesn't have any debt. It's a software play B2C model, and I think they, in terms of Facebook, Twitter, and Snapchat, I think Twitter is kind of like up there in terms of usage, and it's used by a more mature crowd as well, I feel. The technical setup right now looks bad. It looks like it could probably go lower or go sideways. We'll see how this will be as support right here at the 30 area. But overall, I like the growing sales and there's earnings, and so I think this one should be priced higher. That's my take on that.
Twitter took it down.
Yeah, it did. In your words. Yeah. So anything new with you guys? I think last week was I gave it last week was a good week. I meant like last Sunday when I taught. I thought that lecture, I personally was super engaged. It's kind of hard to top that last Sunday lecture, just saying. But anyways, anything new with you guys? Any updates or?
I can't believe Bitcoin's going up again.
You can't believe that? Why can't you believe that? I told you the bullish thesis on Bitcoin.
I was hoping it would go down more.
I know. I was hoping to go down so I could buy some more too, but it spiked up and
It ramped up over 25%.
yeah. So I forgot when I positioned it. Let's see.
But why Bitcoin? Why not some other coin that has
Sure.
better technology?
Sure. We'll talk about it. So I said
Well, they all went up though. As soon as China said that they would make it allowable, what do you call it? The other one went up 20% too.
Yeah.
In an hour.
yeah. Let's see. 25th. I got in the 25th. 25th at 10 a.m. So I just bought it right here. So
Wow, that's
8,500.
pretty telepathic of you.
Well, I'm still holding. If I'm wrong, I still have a bigger long-term view on this. So to answer, what was your question again? You said why is it going up or?
Or why Bitcoin
Oh,
specifically?
yeah, why
not a
yeah,
bigger coin with better technology?
Yeah. So the more I teach in here, the more I start to kind of challenge the norm. Like I think how do you say it? So if you were to draw out like a learning curve or whatever, I think it would look something like this, right? So this is how most people begin in life, okay? So this is the red line is your learning curve, and this is like the blue line is the consensus thinking, I guess. Once you get confident enough, you start challenging the norm, which is right here. Once your knowledge increases, but until then, you kind of follow the rest of the herd. So so the more I taught in here, all these years, it really taught me to challenge like you're right. Okay, all right, sorry. The more it taught me just to like, you have to really be a contrarian thinker, and then I don't know, man. It's just Bitcoin. Like we all like I always tell you guys the example. We all agree this table is a table. This chair is a chair. Why Bitcoin? It's just becoming a trend that everyone's agreeing upon. That's like probably the best I could define it as. But the reason why it's becoming the one is because it's also we're at a time where sovereigns are kind of aging, right? Sovereign debt is inflating or getting too big, and the dollar fundamentals versus Bitcoin fundamentals, which one looks more attractive?
Bitcoin?
Yeah, let's just be objectively speaking, right? Like the way we're looking at the dollar now is like a stock, and the dollar itself has like a balance sheet and an income statement, and the balance sheet looks disgusting, right? It looks very very bad, and if you own the dollar, they're printing more dollars versus if you own Bitcoin, it's distributed in terms of ownership. Right, but dollar is centralized in terms of ownership, and so because of that centralization, there's ability to manipulate the supply up and down to kind of get what sovereigns want, right? Sovereign missions or objectives.
So, Kate, technically, if this was a company with a balance sheet, there would be no assets on it. It would be all goodwill.
Yeah.
Absolutely zero equity of
Yep.
any value,
Yep.
tangible
Yep.
value.
So
when a stock like this goes up from 8,000 to 6,000 to 8,000 in 48 hours,
yeah,
it tells you that all this historical graph is irrelevant. It doesn't mean anything in terms of where this is, because it can go any direction, any moment in time, because of the news of China saying that they're going to take it is completely unpredictable. And anything could happen to that stuff. It could go up 50, could go down 50. There's no way to predict it.
yeah, there's no way to predict it. Well, I mean, I would challenge that a little bit. If you're a pretty good technician, you kind of see. You could actually predict it a little bit. Like over here, it was really very predictable over here, right? It was very trendy right here, and then it started breaking down right here, and then it broke down a little bit. But then now it's like kind of reversing this move right here. So it's really back to where it was. So to me, if you ignore this part right here, there's still like a nice apex that's developing.
But you can't ignore it though. Look at that drop though of like 1,000 in one day.
Yeah.
How do you explain that?
I would explain it as every emerging technology is always going to be Wild West, right? Like right now, Silicon Valley is basically the hub that's developing cloud infrastructure for the rest of the world, right? And it's so like new that regulators can't even understand it. And the whole Libra conversation that Mark Zuckerberg had with Congress this week was pretty interesting, right? Like I didn't listen to the whole thing. I listened to the highlights, but I mean, there was some part where I felt like it got emotional, and the people were like kind of grilling him, like, hey, the whole Analytica thing, whatever, like, why'd you do this, blah, blah, blah. But anyways, going back to the Bitcoin, or the Libra concept, he was talking about, the whole emergence of like new technology and how this makes sense. And, there's people in the world that need this whole banking system and all that. But then on the other side, they're talking about how sensitive the whole, like, do you understand, like, the US dollar is like the tool that's kind of managing the rest of the world, and what you're doing is basically trying to dethrone the dollar, and interesting stuff. But I feel like as these topics arises, like we're moving towards those changing times. But yeah, to explain the sharp moves in Bitcoin, it's relatively small in market cap, only 250 billion, and the players are how big? The entire world basically, right? It's not like a penny stock where the players of this penny stock is probably like a group of less than 100 people, right? This is a 250 billion dollar market cap playing on a population of the world, 8 billion, 8 billion. So it's not like the classic like bubbles of the past, I'd say. This one's a little special. It's different, and I think it takes a investor as well as a technologist to really understand what's going on here. And to me, it's like I think everyone should. This is educational opinion only. I think everyone should have exposure to Bitcoin, just because the fundamentals of Bitcoin look very much more attractive than the fundamentals of the dollar, right? So, and you say your argument is Bitcoin doesn't have a balance sheet or income statement, right? Which is true.
It doesn't.
Which is true, right? But the dollar has an income statement and balance sheet that's decaying, and that they're devaluing purposely. So it's like, well, this one doesn't have it, true, but this one does, but this one's like really going negative here. So this one's like 0, and that one's like becoming -1, right? So that's the reason why I'm getting pretty bullish on it. Again, the demographics, millennials. When I go out there and talk to people like around my age range, they know Bitcoin more than gold, right? And so that's one reason why I think it could be bullish, because I'm a little concerned about the generation, the younger generation. I don't think they really have a chance here, like for a great upside, unless they leverage technology. But if you're going into like a legacy business model, I don't think you really have a chance. It's just, I guess everything that I've learned up till now, we get into it. I think I told you guys already, but I used to think that, pick a stock and it'll go up. But now I've totally changed my view. It's actually, I'm not picking a stock for it to go up. I'm picking a stock because I'm fighting inflation, right? I'm afraid that my money's going to go down. Stocks are not going up. It's money going down. Like Bitcoin's not going up. Money's going down.
Glass half empty.
Yeah. So how do you feel about that? Like a lot of man, I got super philosophical this week. I started thinking about, like, if you think about 2008, right? Like, I didn't have a home, let's say in 2008, so I didn't get hit. But if you actually think about it realistically, you actually did get hit, because, like, yeah, you didn't have because of 2008. I think this is why homes are $1 million today here in Silicon Valley, because if we didn't have 2008, I think homes would be half the price, right? So what happened in 2008 was we printed a lot of money to save the system. But as we save the system, we devalue the dollar, causing asset prices to go up like crazy. You see what I mean by that?
I don't think that at all. I think the reason why houses are $1 million in the Bay Area is because the income of people in the Bay Area is astronomically high.
Yeah.
And there's so many people in the Bay Area making $250,000 or more that can basically raise the value of houses by $1 million.
Yeah.
And it's getting higher.
Yeah,
Look at how many people are going public, and there's another 1,000 people with an extra $500,000 to drop on a house that, if you built that house, it's not worth $1 million, the materials.
Yeah.
But the land is where the value is.
Yeah, no, I agree 100%, and that's why I know it's super hard to explain it. But what you just said is correct. Like, it's the reason why home prices, in your belief, is because of wages. Mm-hmm. Wages are extremely high, but where do wages come from?
Come from money printing.
Well, hold on. You went too far. There's another step before that, right? It comes from corporations.
Right.
So the valuation of corporations are very important. If I'm a business owner paying my employees a lot of money and I'm going to raise their pay, then I got to be getting paid pretty good, right? You're thinking at one layer. You gotta go another layer up. It's actually the
But
corporation.
how can you say though, Apple's value, $1 trillion.
Yeah.
Facebook's value, how many 100 million? Twitter's
500 billion, 600 billion.
If you added up the value of the companies in the Bay Area, you're talking tens of trillions of dollars.
Yeah.
And the employees of those companies are getting a part of it. Look at all of those, right? So they all are making money off of that valuation.
Yeah.
And it's going up.
Yeah.
All the graphs are going
Yeah.
up. So
Yeah. So think about the people who are alive today, who are able to position themselves today. Think about the future of my kids who are not born yet.
right.
Right? It's their survival rate is decaying because prices are going up. Right?
Use
Because
your
of money
graph, though.
because of money devaluation. Because when we print money, now we're going a little higher, right, to the sovereign level. When we print money, it's really we're saving today but sacrificing tomorrow. And so my unborn kids will come into a world where it's going to get really competitive. Like even more competitive.
Yeah, but you showed a graph about half a year ago or so of the graph of value where like the tech companies are going like this,
Yeah.
right?
Yeah.
Well, if you're in the tech
So
field,
exactly. So
you're
you,
betting,
yeah.
our economy in the California Bay Area is betting on that technology curve.
Yeah.
So
yeah.
our economy's betting on that curve to keep going up.
Yeah. Yeah.
So if, you're kind of betting on the right horse. If you're betting on agriculture, you're not betting on the right horse. You know what I mean? Like it's like
Yeah,
you're betting on the
yeah.
right sector that's
So
growing
what
at
we're talking now we're
crazy amounts.
talking about betting, right? And you got to think about who out there really bets, right? How many people are financially literate?
Right.
Not that many. Not that many people bet, and so that's the major concern, right? It's really the older, typically older people who went through the cycles of life and started investing. The ones who bet actually are defending themselves against inflation. So inflation is robbing people of life. Yeah, so I got super philosophical. Was it this week? I forgot who I talked to. I talked to so many people, but basically I say that, you think 2008 didn't affect you, but it actually did because it changed the condition of today. Because back then in 2008, I wasn't ready to buy a home or whatever. But now that I'm ready, I can, if you think about it. But that's because of like massive devaluation of the underlying.
Right.
Yeah, so I see that, I get it now. Like it's just the whole Roman Empire I said last week, right? How they got their people to fight for the war by devaluing silver, but they didn't know that they were fighting basically for nothing at the end of the war, or whatever, right? So the empire kind of collapsed. So today it's not. We're not going through physical warfare where we kill each other, but I would say there's definitely corporate competition, right? So the book Art of War, they talk about whole how to apply it to business. Well, I see a lot of business war today, and yeah, so these concepts are, I don't know, they're super fascinating to me. I don't know. I honestly believe that prices, it's more the dollar going down more than ever than actually prices going up. But there are variables in there where like if this company is just a great company, it'll go up with the added boost of a lower dollar. If that kind of makes sense. Yeah. Well, anyways, any questions on that? Okay.
Is it like the social effect is that all this money printing is inflating asset prices, so people with assets are the winners, and then people living paycheck to paycheck are the losers?
Yeah, I showed you guys last week. I know some people weren't here, but the concept is really, I like to repeat some great concepts, and this is one of my great ones. Let me do this. This is a concept I really like. It's really simple when you think about it. So I'm going to draw a smaller circle, and over here is the distance from this smaller circle with a bigger circle, and this is like 99% of the population, right? Typically this population doesn't go and invest or acquire assets. Typically the average consumer or average person, really the bulk of their assets is just really real estate, like 90 to 99%. Everything goes into real estate. And then up here is like the 1%, right? But in terms, if I draw another circle, right? If you draw their asset circle, the assets look like this, 99%, right? So 1% owns like the majority. I'm just giving out numbers. 1% owns the majority of assets, and then over here owns like, let's say 1% of the assets. So these are assets, and this is blue would be population. Okay. Let me draw this. So blue is population, and red is assets. So what's happening right now is when the governments print money, right, you devalue the base, what happens to asset prices? They go up, right? And so if you're down here, you don't hold any assets, you don't participate. So I draw this line right here because this is the wealth inequality line. So what's actually happening is that, well, if they print money, they actually make this line even longer. So the wealth inequality increases. Does that kind of make sense? Or,
Yeah.
yeah. So in a way, it's forcing everyone to participate. And then if you think about the concept of like zero interest rates or negative interest rates, it's like if you hold money, you're gonna lose money. Yeah. So.
How many people are actually holding money though? I want to say they talk about fixed income, which is older, retired, young people. Their salaries going up because of this inflation.
Yeah, so you might be, that's true. So yes, when there's inflation, salary increases, but the question is how much does it increase, right? And so I have some interesting charts I'm going to skip down ahead and show you guys today, just because we're already on that topic. Let's see. This chart right here, let's start with this one. I found this one very interesting. So the red line is the average hourly earnings, okay? And then the purple line is the purchase only house price index. So right now, yeah. So you say that when we have inflation, the wages go up, right? So this is employee wages, and then this is home prices. And then if you backtest and you use a recession as an example, the gray line is recession, and then this is the 2008 recession. This is the 2001 recession. So in 2001, it really decayed down. So what does this tell you? If you want to try and interpret it, or do you want me to tell you like?
It's harder to buy a house.
Yeah. So this tells me in this current environment, people are trying very hard to buy a home, relative to what people on average are earning.
Well, there's a cycle. At some point, it might be easy to buy a house. Maybe next year.
Yeah. So I mean, then you're saying either. So what's more realistic if I asked you, right? So if you know 2008, I'm gonna change the color to blue. This distance right here tells you how hard it is, how hard people are trying to buy a home. In 2020, wherever we are today, this is the distance, right? So if you're saying that it's going to correct, right? Are you saying that our wages, corporations are going to suddenly pay people a lot more, or prices will deflate?
Well,
I don't agree. I don't agree.
I actually think if you ask me if they're going to print money, I think it's going to continue to expand this way and expand this way. So the difficulty will increase. Anyone agree on that model?
So
Or
the price goes down 10%.
Yeah.
So someone who could afford $1 million house, instead of trying to buy a $2 million house, they still can't buy a $1.9 million
Yeah.
house. So it doesn't really solve the problem.
Yeah.
Unless they miraculously create more land in the Bay Area
Yeah.
and incomes go down, the demand for that land is going to remain.
Yeah.
So like
So-
you said, the properties on the other side on Fremont and wherever,
yeah,
good speculation that if there's more people buying in Menlo Park and that they'll go over that bridge, that's a very logical move that some people will take that extra half-hour commute
yeah,
and buy in the Fremont, Milpitas type area.
yeah. No,
So it's just going to keep going up and up. So more and more people who already have 2-hour commutes to have a house
Yeah.
will stretch the budget to try to move closer, but it still keeps going up.
Yeah. So what as a group, what scenario do you think is the most, right? So Joe thinks a correction is likely, right? Maybe back to the affordable line, but if that's the case, I think it'll bounce up very quickly. Because it's just like if you understand technology, cloud infrastructure, where the world's going, and this is the hub of it. I showed you the map of Silicon Valley. This is like even if you experience a 20% price cut, that's like probably a consideration to buy more. Yeah, because here you're not just competing with other high-paying executives. You're competing with corporations who need space too, right? Corporations could buy out a whole neighborhood if you think about it. They got the money to. So unless the corporation somehow turns into a spaceship like Apple and then flies into like another area and then lands itself. And then creates jobs around there. I think the infrastructure is very powerful. I think, but my question is, I don't know what will money printing do, because there's two scenarios to this, right? There's another scenario that a lot of people don't think about is, if we start printing money, what if things go like this? What if things are not like appreciating or anything? It's just going sideways.
then where's the money going?
Like Japan, right? Yeah, exactly. So now the question is, where is the money going? It could be going to emerging markets where the opportunity is just better, right? Japan's been printing money for a very long time. but prices haven't really reflected. So my guess is that money's leaving Japan. So that's why you see China as a different sovereign model. They print a lot of money, and then they do the whole capital control to hold the money inside, right? Because they want the money to reflect in asset prices locally in the ghost cities that they build. Have you guys heard of the ghost cities in China? Yeah. So in China, to kind of spark economic, okay, let's see, ghost city, China. I haven't looked at this in a while, but they've actually built a bunch of like ghost cities like this, where there's no one living there. But why do they say, hey, build it anyways? So people could maybe one day live there, or it's really just to give money back to the people that keep working.
I mean, those cities have no one living in anywhere in that whole area.
No.
They're just vacant. So
Yeah.
if someone actually put the capital to build a building
Yeah.
where there's no income from the residents at all.
Yeah.
That's amazing.
Yeah.
Squatters can go there.
Huh?
Squatters.
Squatters? Yeah. I mean, yeah, it's like a squatter's paradise.
The government built them?
That's a good question. I think the government probably. I don't know exactly on that one.
The government is involved in it, but not a major investor.
Yeah.
It's still like the majority is.
Yeah. Okay. So let's say this: if I was a government and I was fraudulent and shady, yeah, I'd build that. Right. And now, if I wasn't, then and I know we're printing money, then I'd probably make friends with commercial real estate developers.
So do people build that speculating that 20 years from now that's going to be the next Shanghai and it'll
Well-
be worth trillions?
Well, okay. Well, think about this, okay? Like you got China right here, and then U.S. right here, right? And then China's printing a lot of money. So when you print a lot of money, they're also doing the capital control. They're trying to hold the money in the economy. If it floods out, then they don't get what they're trying to do, which is like promote economic transactions. So by doing this, someone had to build this, right? So workers had to build this. So if someone built this, they gave money to the workers, then the workers could go spend. So the more we could kind of artificially engineer spending, then the economy does better.
Yeah, that's hard
Right.
to believe. That's,
Yeah, so that they would go so far to build ghost cities, which is like, wow.
You could build
Right.
something else that's more useful.
Yeah, it's not, so this is the question, exactly, the word you said, useful, is extremely important. Because what we're doing now is we're making money even cheaper, and we're not putting money into real useful value. It's becoming malinvestments. When I say malinvestments, think of WeWork, with like crazy valuations that are not making any money. So, and these high valuations can't sustain because our lifespan didn't increase. We're doing all this to kind of, one way, increase our lifetime value, meaning like live longer. But if that doesn't actually increase, then all this is actually for waste. So the artificial printing of money to engineer this, whatever, it's creating malinvestments. It's creating.
You only have like 1 to 2 children per family.
Yeah, it's creating unproductive deployment of capital. But it's just to spike the economy. So when you see all this dynamic at the sovereign level, then
Is the theory build it and they'll come? So now that I've built the city, hopefully people like first quarter will come along, and then some economic activity will pick up.
I can't tell you that exactly. I don't know. I honestly don't know. But I would view. I think the best answer is if you view it from like a sovereign perspective, a government perspective. Like, okay, I want these ghost cities. I'm gonna get permits for these ghost cities to be built. So yes, the government is participating in a way, but why? Well, we're printing all this money, and we're just gonna give them jobs. So I think it's more just focusing on giving the people a job so that they go spend on other things to cause prices go up.
It's just like how World War II pulled us out of the Depression, because we had all those jobs as infantrymen.
Yeah. And the reason why no one thinks about this, that's why I feel a little special when I think about it, because no one lives more than 100 years old. That's what I said last week. If you live more than 100 years old, you see these sovereign cycles up and down, up and down. You see that the world at one point, the dollar was not the world reserve currency. But because we only live for like, I don't know, 70, 80 years or 90 or whatever, we only know the dollar as the reserve currency. But you have to look like, like some of these money managers like Ray Dalio or whoever study like 5,000 to 10,000 years of history. And then when you look at 5,000 years of history and you look at all these empires, they did the same thing. They always devalue for sovereign objectives, right? So I'm not into the whole political stuff, but it's becoming very critical to a point where I have to pay attention because it affects markets. So that's why I pay attention.
There's some of this in the Bay Area too, though, right? In New York City, people were buying houses in Harlem on 175th Street, shithole houses that you'd never even want to walk into, but speculating, excuse me,
Yeah.
that every year the comfort zone of what people will buy goes up about one block every 5 years. So if you have a house on 135th Street,
Yeah.
every year it goes up to 135, there's 6, there's 7, so that house on 170th Street in 25 years from now will be worth that. Same thing with East Palo
Yeah,
Alto here.
yeah.
East Palo Alto, where that IKEA was,
Yeah.
was a kind of a, who really wants to live there? And yet now, that's bleeding into that area where that now, if you bought that 10 years ago, you did incredibly well.
Yeah.
So it's the same thing where people are just pouring speculative money into areas where there's no real, high valuation,
Yeah.
betting on that 10 to 20 years from now, it'll be the next
Yeah.
normal Palo Alto.
Yeah. So let me ask you guys this question, okay? Because I think some people don't see what I'm kind of seeing. It's very hard to explain, but it's just really the concept is called purchasing power. And let's just say you make 100,000 today, right? And that 100,000 could buy you 100 iPhones because it's 1,000 a unit, right? And then next year you suddenly make 200,000, but for some reason you can only still buy 100 iPhones because the iPhones went up to $2,000. So did you make progress in your life?
Right.
Right? So now going back to what I said earlier, like I tell you that my unborn kids are getting ripped off right now because we're inflating prices to even more higher levels. So that when they're born, the multiple of their income to what assets they could afford expands. Right? And I have another chart to explain that. What do I mean by that? So let's look at median home sold prices to median income ratios. So in 2008, at its worst, it was about 9 times the average income. Let me know if you understand what I'm talking about here. So what you earn, right, times it by the multiple of like the cost of that home price. So let's say in 2008 at the peak, it was about 9 times, 9x. Today's at 11x. So it's getting more difficult. And this is by location. So red is San Francisco, blue is San Jose, and then NYC and all that. So San Francisco is truly the highest multiplier, most difficult to purchase. I don't know if you're registering.
So is that an indication that prices will go down?
No, it's not. It's not indication of anything. Besides that, it's overvalued. And besides that, it's very hard to purchase a property because it's 11 times the average income.
I think it'll keep going up. I mean, everyone.
Yeah, exactly. So if it keeps going up, it's, my unborn kids, when they come into the world, well, they're going to be facing like 15x, right? And so if the wage is decaying, by that nature, wages are decaying because they're printing money, causing prices to go up. Remember the whole iPhone, you purchase less, then the whole model of having a job is actually decaying.
But the thing is, this whole phenomenon is only certain location in Silicon Valley. But if you go outside of Silicon Valley, this doesn't apply. So
Yeah.
I guess people, what they do, they probably have to work remotely and they can buy a house for $200,000
Yeah.
they can't afford.
Yeah.
And
So
still make the same salary. So that's eventually gonna adjust because these prices not gonna come down as long as there is money come from outside of the country into the area, and people who make lots of money, they keep buying and inflating these prices. As long as we don't have more land, I don't think this is gonna come down.
yeah, exactly. And it's also, this area is different because of the collection of corporations, and that collection of corporations also breed a collection of powerful clusters of human capital, right? That can only be here to build AI. I was talking to Raj, and Raj was saying, well, is he online? I don't know if he wants me to mention this. He worked. Okay, I'm just going to mention it anyways. Forgive me, Raj, if you're online. He's working at Samsung now. He came from NVIDIA, and he talked about one of the major corporations here in Silicon Valley that the world is moving towards GPU, right, versus CPU. And so he said something along the lines of like, there's a Texas team that they fired a whole CPU team, and they're hiring now a GPU team. But where are they hiring? Silicon Valley, because that human capital is stuck here, right? As long as that human capital is stuck here, that human capital will continue to earn high wages, and as they continue to earn high wages, then prices will reflect this. But what I'm trying to tell you that, yes, you said that this area is different. What I'm trying to communicate to you is that there's a factor of money printing, right? So when money's being printed, great areas like Silicon Valley will grow at 5x versus like, let's say San Jose 3x versus like over here 1.5x.
But that only affects you if you're an investor, right? But if you're a renter,
Yeah, it gets more difficult for you because you're not
I,
participating.
I think maybe the market may change to renting versus owning a house.
Yeah, so now with the introduction of technology, we're talking about maybe breaking down this into like, subscription models. And I had a conversation with SK where we were just getting crazy with the economics, where we're saying, well, if it becomes rental, okay, and quality of life is becoming more, more valuable, difficult to achieve, then I was just joking with him saying, if that's the case, what if we one day just turn the whole living into like an Uber model, right? Where you're renting on demand, meaning I'm gonna buy 8 hours of sleep today, and then once I'm done, I have to leave the home and then go work.
That doesn't work because someone owns it.
Yeah.
So if you rent, you're renting from an owner.
I get it. I own it, right? But what if I'm the entrepreneur and I approach every real estate owner and say, hey, I know a way to maximize your earnings. Let's charge them for 8 hours of sleep, right? And now we incorporate, and then I distribute the money to you as the owner. Because as the owner, you can't get the current market price because it's too damn high. Because price is inflated too much, right? So an entrepreneur comes in and saying, what if we could get a fraction of the price and then get the volume of people and leverage technology, if that makes sense.
So basically it would be extension of Airbnb.
Yeah, but then like we're counting it down to like the hours of sleep, which is like inhumane.
Well, I think home ownership is a big opportunity cost, right? Because you can put that capital towards, in the S&P, for example. You don't necessarily need to own a home.
Yeah.
And so I think it's a positive if people stop owning homes, because I think, owning your car, owning your house, these are huge opportunity costs.
Yeah, I love how you guys are really moving the conversation along, because I got another chart right here that talks about prices since 1998 to June 2019. So you talk about, people should stop owning a house or owning a car. This is a pretty cool chart just showing like what actually appreciates in value. So if you notice how I'm always talking about the whole college tuition prices right here, right? If prices go up, what would you want to do? Do you want to consume something that's going up, or do you want to produce something that's going up, right? If tuition prices are going up, I want to run a university, because now I'm going to benefit a lot, because people are willing to pay at that price. Versus like, okay, this is kind of funny for me, because I like software, right? If software is going down, or TVs are going down, let's say, do I want to produce TVs, or do I want to short it? So this is a market example where you would want to short it. But be aware, I pull up this chart because it shows the different, these prices, they bleed into every layer of consumption that a person has. Everything from medical or hospital services to college tuition to medical care services, hourly wages, very fascinating stuff, right?
It's interesting that wages grew faster than housing in this one, so I guess the gap is really confined to Silicon Valley.
Yeah, Silicon Valley is above average. That's why I drew the last chart. Like Silicon Valley is growing at, let's say, 5x compared to everything else. Because of back to the picture I showed you guys in the beginning, right? It's the cluster of corporations, the quality. This is like top tier in the world. The biggest company in the world right now is Apple. It's at 1.1 trillion once more. At one point it was at 1.2. So it just became number one again. And then we got Google over here, we got Facebook over here, and Oracle, and plenty of other ones.
And Apple has their results next week, by the way.
Yeah. So if there's like the only thing that would take down real estate prices locally is if we have a collapse of S&P 500, right? Because if there's a collapse of S&P 500, then all these companies are in the S&P 500. Yeah, then now it makes sense for prices to kind of deflate. But if prices slow down, personally for me, I'm not trying to provoke a transaction here. If prices slow down in a good amount, like, I don't know, 5-10%, yeah, I guess, to buy a roof over your head, it makes sense in this competitive economy.
And I'll say inflation is only a problem if your primary source of income is from a job.
Yeah.
So it's not really a problem, it's just that most people prefer to have a job over owning assets. Inflation-proof assets, right? So, like, I don't know, this is a bad maybe example. You own Coke, right? Coke is going to increase its price with inflation.
Huh? Oh.
Prices with inflation, right? So you're going to keep up with inflation.
Yeah. So Wait, what'd you say, Bruno?
The security scan thing.
Disappeared?
Yeah.
Okay. Yeah, so what you said is correct. Like, you get the lowest end of the stick if you're forever chasing wage, right? Meaning, like, you're chasing a job. Because unless you get past the VP director level and become an executive, then that's different. At that point, you're looking to bring more people into the gig, right? So the chart that I always like to draw, if you guys recall this, so the difference between being a worker employee versus being a business owner, right? So if you understand that there's inflation in the economy, this is the inflation of the worker right here. Very controlled, very down pressure because corporations have the incentive to cut expenses. So this is the wage inflation, right? But if you go over to business owner inflation, if they start printing money, the business owner reaps a lot more quicker, right? But this comes at the cost, as a business owner, it comes at the cost of time, right? There's another chart that I drew last time, if you guys recall, is the investor chart. So the investor is just as powerful as the business owner because it's also sensitive to inflation as they print money. But the beauty is that it doesn't come at time. It doesn't cost time to be an investor. So the investor position is extremely powerful, extremely leveraged, because I might not know AI, I might just know like transportation logistics, but I could immediately invest into AI and get exposure to that inflation, which protects my standard of living or my position in the world, right? So the difference here is that it takes no time, but the risk is the invested capital. So let's put IC. Right, so that's the difference between the three, and those are the three ways to make money. 1, 2, 3. So remember, corporations, unless you get past the certain level, let's call this the executive level. The moment you pass this executive level, you'll be like this, because now you get equity bonuses and you're exposed to inflation.
There's an interesting quote that I heard is, it depends on if your time horizon is long enough, stocks are risk free.
That's basically saying dollar is going to zero.
So if people are short-term investing or medium-term investing and not long-term investing, that's where the risk is in the market. But if over a long haul, over a 10, 20-year period, there's no risk in the market.
Yeah, that's true.
Yeah. But why? Can you prove that statement? Why is that statement true?
Well, you can look at the Dow Jones over the last 100 years, right?
Yeah.
It's only been climbing.
Yeah.
But don't forget the Dow Jones, the stocks in the Dow have changed,
Yeah.
right? It's not the same companies that are in the Dow as there were 50 years ago.
Well, you're absolutely right. I don't mean every investment, but I'm saying is if you put it in the Dow, for example,
On
or
average.
the S&P,
Right.
you're going to beat inflation, and and maybe make a little bit.
Yeah.
And over a long-term horizon, it's basically risk-free because as long as America's growing,
Yeah.
you're growing.
Yeah.
That's
Yeah.
right.
And we're engineering some growth too. But going back to this real quick, did this make sense to anyone, or like was it like interesting, or because this is like one of my favorite concepts of like all time, right? The 3 ways to make money in charts and what you're exposed to, whatever position you take. If you take the employee position, you're subjected to downward pressure and wage inflation. Because there's real inflation, there's economy inflation, and then there's your wage inflation, which grows slower, right? Unless you,
This is like the trickle-down economics, is that when they print money, it first inflates, your assets at the top before it trickles down to your wages.
So
That's why the investors and the business owners,
This-
they get in on it first.
So that's my life's goal right there. Another favorite concept that I like, if you guys want to, you want me to draw another concept that I personally like? Yeah, no, you know? Okay. So another concept that I noticed, this has to do with networking, because I started looking at having a network as a very valuable asset class that it's like almost like a real estate asset that the governments can't tax, right? You can't, if you build up a network, the governments can't tax that. But if you build up a real estate portfolio, well, hey, you got some taxes, right? What I noticed about these executives, or startup executives here in Silicon Valley, or you could even say VCs, but more like the CEOs who go and ask for money from the VCs, is let's say this is startup 1, let's just do one straight line. Startup 1, 2, and some of you guys saw this already before. This is what I noticed. So this is startup 1, right? They'll start the startup and hire people, grow the startup into this value, and then they'll exit. They'll exit right here. right? Now they'll take that money, invest it into another startup, and they'll build that startup again, and then they'll exit again, right? It's just taking an investment position. And then the third startup, they'll take it, and again, they'll exit right here. So what grew in that period of time, right? A lot of people don't realize this, but I start to see it. There's another line in the back. Yes, their money line grew the entire time if they had all those 3 successful exits, but the network grows all the way. The network never stops growing unless there's, the only thing that could deflate that is like smallpox or something, right? Think about that. Yeah. So those are some of Kay's very interesting and powerful concepts that I feel people don't think about hard enough. But anyways, today, guys, a little bit sluggish. I had a mixer yesterday. I'm trying to network as much as I can, just because the opportunity is too great, as you can see. There's, there are people in Silicon Valley who are chasing the real estate asset in Silicon Valley. Fair game. I like that too. But I also believe that the human capital, that goes into these corporations every day to build up their, the services or product or whatever, live here in Silicon Valley. So I personally geek out to networking with these guys to learn whatever I can from everyone. So be excited that we're here in Silicon Valley. Nowhere else do you get this such beautiful collection of cluster of knowledge, human quality, standard of living maybe, quality assets, global assets. It gets me fired up, man. Anyways, today would be technical discussion number 137. We're going to talk about stocks, earnings. We're going to look at Tesla's earnings, the EPS surprise. Yeah, it's pretty interesting. I haven't been a participant in Tesla, but a lot of people ask me about it. I just don't like the fundamentals. But looking at it's overvalued for sure, but just looking at the bigger play here, I realize the autonomous vehicle is a really, really big bet among enterprises, right? When I say a big bet, I'm talking about a lot of these guys in here are involved in autonomous vehicles, right? We know Google has Waymo. We know Apple kind of flirted with the idea. They made some acquisitions around autonomous vehicles. So that's a very big market opportunity. And I like to think about the autonomous vehicle concept just like how they deploy phones into our pockets, right? So if you think about Tesla's a little special then, because I wanna kind of understand why is the market pricing Tesla so darn high? I guess we could jump to it right now and just look at the market comparables real quick on Tesla. Why do we price this so high? You can see it right here. So this is Tesla, and I basically, and if you don't believe that's the true numbers, then I could pull it up over here. So talking about Tesla, right? So auto manufacturers major, and then I like to organize by the biggest player down. The biggest player is Toyota, and then Tesla, and then GM, right? And we want to look at the valuations. So I'm just showing you what I took a picture over here. We want to look at the valuations, right? So you already know the biggest one is Toyota at worth about 200 market cap. Oh, I didn't flip the valuation, did I? Oh, I did. Going over here. Looking at the relative value and cost of Tesla. Tesla, compared to the industry, is trading at 2.4 times. Compared to balance sheet value, is trading 10 times. So, and it's at a market cap of about 58 billion. So my question is, why? Why do we allow something like this to trade at a premium? Because we're pricing in the future growth, right? You have a comment?
Yeah, so we're investing for the future. I mean, Elon Musk right now, he's disrupting all kind of industries.
Yeah.
I mean, he spends zero money on marketing, and he's very persistent on that. He just rolled them out. He has a superior product. They're building a gigafactory in China.
Yeah.
They're gonna build millions of cars in there. Right?
Yeah.
And they're gonna put one in Europe, right? And it's like if you go back to TVA, I mean, we had CRT, right?
Yeah.
When flat TV came out,
Yeah.
the people that wanted to get TV, they wouldn't go buy a CRT. Now the flat monitors are out, you go buy.
Yeah.
Same thing with TV. I think this is the future.
Yeah.
What I would do, all those companies list, I would shoot all those. Okay. I mean, Ford is going to be out of business. I think most of those.
I
jump on EV and they're already too late.
So I kind of want to agree with you because I'm starting to realize something. Because when I look in the software space, right, all these unicorns like Lyft and stuff or whatever don't really have any balance sheet value. But but it's always been the topic of technology. Remember I said that we're moving towards, the future investment analysts will not be financial analysts, financial heavy analysts. They're going to be data technologists type of analysts. So from a technology perspective, again, I think the market's pricing in the technology aspect of Tesla. So I understand that moving around is very important, and just think about Apple, how Apple's like number one biggest company in the world, but because they deployed a mobile device into our pockets, right? So the car is like the next major hardware purchase. But I personally think, when I was reading through the investor relations presentation, they talk about their software, right? And how they, you could summon your car, like how we used to summon a horse, but today we summon a car. You would whistle for your horse back then, but today you use your phone and you summon your car.
See, that self-driving cars will actually disrupt even
Exactly,
real estate.
exactly.
All
So
these companies that are here in Silicon Valley can afford to move hundreds of miles away, and people just drive by themselves.
yeah, so I think the bet on Tesla here is nothing like Toyota or GM or Ford or anything. It's a different play. It's completely a different play, and the markets are widely challenging that. And I like what you said, that it's all word of mouth. I believe in word of mouth more than forcing marketing onto a market for the market to kind of realize you. That takes a long time. But he's honestly building a great product, so I hear.
Also, it requires less manpower to create a car, and also there's less manpower maintenance to
Yeah.
maintain the car.
Yeah.
There's no union for building the cars.
Yeah.
Every other automobile industry has unions.
So to understand the opportunity here, right? Like I'm not at all bullish on the fundamental valuations. It's clearly overvalued. The balance sheet is 10 times, but I think this is the way the markets are treating it now that I understand the difference between legacy companies and cutting edge companies. There's a major difference, right? And that difference, we allow the premium to be priced in. So if you look at the recent report over here, now from a fundamental money making perspective, they don't have great margins. So to me, it's not attractive from investing long point of view. But it just seems like he is the only player that's getting into the technology of autonomous vehicle or autopilot, full self-driving, and then vehicle software. Because I understand that as the game gets more saturated, I don't think it's the car's beauty hardware is the initial attraction, but the real game is the software game. So in terms of who's winning the software game, I don't know, because if Tesla wins the software game, now you become a software company.
为什么这样子？
And
我
then
就怎么啦？又干啥啦？头昏掉了呗。这是小状况。
So I'm gonna mute somebody real quick. Yeah. So as I was saying, what was I saying? So as the game becomes more saturated, more players jump in this autonomous vehicle. Not everyone. It doesn't make sense for everyone to start in AV software. Only one player in AV software will rise, right? So my thinking is it going to be Google or Tesla that actually has a product that owns the infrastructure, right? It's like Netflix, who's just a software. But wait, no, I'm sorry. Netflix owns the content as well, but they don't own the physical infrastructure to deploy the video content. So this is the same model once more, right? The question is, will Tesla have the edge of building its own car and own software? But that's a longer term play.
That's what Musk keeps saying all the time. We are a software company who happen to be in the automotive industry.
Yeah,
right?
yeah.
So that's exactly the point, and he's selling software.
Yeah.
But Toyota's doing that too, self-driving.
Yeah, but who's more of a specialist? The ones in Silicon Valley or the ones in Japan? That's questionable, right? That's hard to say.
Well, anyways, I don't get yes.
Yeah. So this is where, as an investor, like if you want to evolve and stay with times, you have to learn software. It's, in my opinion, it's default. Like if you tell me you're a fundamental analyst and you're looking at tech companies and you don't understand the valuations, like you just have to learn software.
I may be wrong, but has Google been doing it longer, self-driving?
Yeah. So but they're not doing their own hardware, are they? If anyone knows.
Yeah, so that's more of an advantage, right? 'Cause
Yeah.
the hardware is where the losing businesses.
Yeah.
The software is where the value
Yeah,
is, right?
yeah.
So
But to attract, look, so how do you get someone to use software? By giving them a Waymo car, let's say,
No, I mean,
or a sexy car like Tesla.
Google
Think about that for a
sells to
second.
Toyota, BMW, they can sell it. They can partner with automotive companies.
Yeah. So I think the game here is.
But you could control, if he owned the whole vertical, right? You is that? I mean, did you
Control the whole package.
Yeah.
Right, but.
So he could introduce software to Toyota. Hey, you could summon your Toyota with Tesla software.
Yeah, but more resources are being used on the algorithm than the actual, he's focusing resources also on the hardware.
Yeah.
Which is a losing business.
It's
Much
slowing
Bill Gates
him
in the
down.
PC industry, right?
I mean,
He's not gonna
have you
build a
watched
PC.
the autonomy day when he did presentation on the chipset? The chipset is like 7x faster than fastest GPU from NVIDIA. And they couldn't get that from NVIDIA, so they built their own.
So
But the,
That-
yeah,
I mean, just watch it. I mean, that's amazing.
but that's hard, that's still hardware. I think the value is more in the algorithm.
it is. It's all software, but okay. So let
Mathematical algorithm, right? Whatever.
yeah. Let me explain this real quick. So okay, if he really wins this software opportunity, he could be like a $500 billion plus company. This could be 10x. This could be $3,000 if he wins the software game. Meaning, so to win the software game, it's all about engagement, software engagement. So
I'm invested in this company called Appen.
yeah.
What they do is they do human annotation. They annotate data, right? And
Yeah.
only humans can do it.
Yeah.
So for the purposes of machine learning. So for a machine to program itself, it needs to have data. You need to give it an environment. You need to say this is a sign. This is. You don't to build a self-driving algorithm for a vehicle. You don't necessarily need the car on the road. So
You don't need
there
it,
are actually companies
but
out
you're
there
more
that-
you have more intuitive data.
Yeah.
You have more, like it's like you're saying you're an AV software company, but you don't have actual cars. So how is your data more, how are you more one with your data? I understand being one with the data more than anything because I work with data, because I speak to quant traders who well I even listen to maybe don't even use me as an example. There's a money manager in LA who says like the pure quants that come out of college, they just don't understand that you have to be one with the data. You have to have that discretion like as a trader to truly understand the data. So I kind of could relate. So I want to kind of change my view on Tesla here. Okay, so this is my take. Fundamentally is overvalued, but we want to ask why. And the market's continually to price billions of dollars into this security. So this is like billions of dollars type of intelligence out there. So someone's willing to bet that money. So I'm seeing if it's a software game, he wins the software game, then this could be easily 10x, right? But until then, it's going to be the roughest roller coaster you'll ever ride, for sure. Because the opportunity is massive. We're talking about software. Like if he becomes like he's going to be the Uber of autonomous vehicle. No, that'd be Uber then. Is Uber getting into autonomous vehicles?
See, that's
But
another
he's
thing.
going to put the Uber out of business.
Yeah.
If you have
Yeah.
autonomous and you have the technology,
Yeah.
why need Uber?
Yeah. So
Some people don't want to have the cost of ownership.
yeah, so let me explain to you guys the concept of engagement, okay? So Google might have Waymo, but that car is not like physically attractive or whatever. The experience might not be physically attractive like a Tesla. So humans won't engage with that software. And for software to survive, it requires human engagement, right? Like you guys are engaging with me right now. Imagine if I was the opposite where, hey, welcome guys, here are some snacks, and then here's a 2-hour presentation with my deck, and I'm focusing on high sales, low value, right? We're not really engaging. So the software is the same thing. Humans have to engage with the software. So I think if he successfully pulls it off with a physical vehicle that's attractive enough to get people talking about it, engaging with the software in the Tesla, then once he wins the crowd, he could easily distribute, and the margins will change just like that. But I don't know. I'm not an expert in this segment, but I understand software.
There's also a regulatory issue. If you get a self-driving algorithm car,
Yeah.
I'm sure it's going to be government
Yeah,
controlled.
it's the toughest headwind. It's the toughest headwind
So if they
ever.
decide Google's algorithm is much safer than Tesla's, Google will have a monopoly on the business.
That's hard to say too. I don't know.
It's whoever, I think whoever convinces like lawmakers that our algorithm should be in cars, right? Because it has to do with people's lives, right?
Yeah.
I disagree with it. It's a purely software issue. I mean, think about it. You cannot compare a computer with Windows as a self-driving car because you need the data to be accurate. If you don't have good data of the surroundings, your data is not reliable and your car is not reliable.
Yeah.
So I think Tesla did a really smart move because they know what they're analyzing
Right,
sensors
right.
they're gonna put in.
So you're right. So it's very vehicle specific. Than you would say.
It's much more.
Because like there's two data sets. One data set is like the external, right? And then one data set is the internal, based off of your specific specifications of the vehicle. And this is the data of the vehicle going against the data of the external environment. So maybe they do have an edge with the data. Would you say?
Is this
Or-
just crushing down the numbers about having a layer on top of the car, plus I don't know, like 20 sensors, I don't know how many sensors the Tesla car has, a bunch of
Yeah,
them.
yeah,
So just crunching all that data in real time and making sure that the people are driving safely
yeah,
before it even goes on the cloud and compares the data and compares with machine learning on the images they capture.
yeah,
Just doing that is already a hardware challenge combined with software.
yeah,
It's the package.
yeah.
If you just add, algorithm that runs on the cloud, what data are you gonna send to the cloud?
Right, right.
Yeah,
Well,
so
just think, when you take an Uber, technically it is a self-driving car. It's not you.
Well, it's
You're
but
trusting someone who you don't even know who they
so
are.
okay,
to drive, right?
exactly. Uber is different from what Tesla's doing here, from AV. Okay, AV is autonomous vehicle. Uber, there's a person
No, what I'm saying
driving the
is-
vehicle still.
When you have a 19-year-old Uber driver or whatever it is who you don't even know how well they drive, right? But they're driving 60 miles an hour.
Yeah.
And you're taking a chance of letting it go, right? So technically, if Tesla could show that statistically,
Yeah.
it's safer to have that, autonomous vehicle than the millions of other drivers, then technically that autonomous car, as strange as it is, could be safer
Yeah,
than the overall average.
Yeah,
And if
yeah,
that
yeah.
is to be proven,
Yeah,
then technically the autonomous could take off.
Yeah,
That could
yeah.
become, very, very compelling.
yeah. So Uber is the searching technology to find a willing driver, right? But Tesla is trying to disrupt the driver, the willing driver.
Yeah, but the industry has shown that just because an industry is growing,
Yeah.
doesn't mean the companies in it can all go bankrupt.
Yeah, yeah,
So if you look at like the television, right? That's huge invention. Before you couldn't even see who the president was. Now you can see who he was, right?
yeah,
But people knew there were going to be a bunch of TVs in everyone's household. Now not one TV is manufactured in the United States.
yeah,
You look at the airline industry, that was a massive innovation, right? Commercial travel, right? And
Yeah.
everyone knew it was going to be big. Bankruptcies left and right. There were, I think Warren Buffett said there were like around 300 to 500 car companies in early 1930s, 20s.
yeah,
Now there's only 3 major ones. So even though the industry has grown and they're super hot, there's going to be a PC in everyone's household, but where's Compaq? Where's Dell?
yeah,
Right?
Yeah.
So I think people need to make the distinction between a hot industry, because in a hot industry it attracts competition,
yeah,
right? It attracts a lot of money.
yeah,
So you don't know who's going to come out on top. It's a big gamble.
yeah.
But they've always been a leader, and I think Elon Musk with his vision and persistence, I think he's the one. I mean, it looks like he's the one. I mean, who else is there to have autonomy? I mean, autonomous.
It's still early though, right? In the next 20 years, you don't know
But
who's
he's
going
doing a
to
good
be.
job so far. I mean, he's performing. He's delivering.
Okay, so we don't know the direction, but I'm going to keep it short here and move on to the next topic. I think Tesla, if you ask me from a trading perspective, the way earnings reacted, I think, yeah, for sure, this one's setting the direction to go higher. I think it is a bit overbought. Maybe we could go back to 300, revisit. That 300 will act as support. But I definitely think it'll hold something like this and then continue higher.
Yeah.
That's my take on Tesla in the next 3 months. Even probably participate in the Santa rally this year. So if, for those of you who don't know, my views kind of changed because we started printing more money starting October 11. Right? They announced that they're going to print more money, and now they're deploying more money into the system. So I think that money will initially go to value stocks, but yeah, that's the bigger picture view currently. It's also good for gold because you're devaluing the base. Any questions on this before I go on the next topic? Do you guys want to see the Tesla presentation since we're already on that topic instead of like revisiting it again? So this is a slide deck. I'll kind of go pretty quick and just share with you the Q3 2019 updates. Now, for those of you who are like, I'm not playing Tesla, treat this as like a use case, a learning example, right? Because if you learn this, you learn one or you practice a few, they're all kind of the same. So this is being productive even though it's not something you're investing in. So Q3 2019, looking at Tesla, just some quick highlights. It looks like they became profitable. I won't read this out, but I want to talk about the operation. So they do have a gigafactory. So they're building a factory in Shanghai that's going to kind of ramp up their production. So sales should be anticipated to grow, right? Over here they're doing like what 90,000 units in Fremont, but they're looking at 150,000 in China. We'll go down and revisit those numbers to make sure. Record vehicle production of 96K, deliveries of 97K. Record storage deployment, so they're also doing energy. I think you know this one a lot better than me. So they're selling like big giant battery houses.
Yeah,
Could you share anything on that?
Powerwall. Yeah, so what happened, because they were so focused on the Model 3, because they had to build enough volume because there was demand to
Right.
survive.
Right.
So they diverted all the resources from the energy sector of the company, which is the solar
Yeah.
and the Powerwall.
Yeah.
So now they reached that goal, so they're gonna go back to the energy, and that's gonna be a big growing sector.
Okay.
So
Okay.
they start, because the thing is, they have to, all these cars they're selling, like 97,000, require batteries, so they just don't have the manpower and they can't keep
Yeah.
up the
Yeah.
production. But once the second gigafactory comes online, then they can do that. So I think Tesla from here is just gonna just skyrocket, I mean, in terms of production, and I mean, there is no shortage of demand. Do you listen to their earnings call? They were not concerned about the demand, they were concerned about the manpower, the labor power to just produce all this stuff.
Yeah. So are you guys familiar with the J curve? Like every startups with the J curve, where when you start, well, actually it's below this line. When you start out, you actually lose money, and then you kind of bottom out, and then you start gaining. The way he's playing it is just like a super extended J curve. Yeah, but the more extended, right? This period of extended J bottom trough or whatever, he's creating a lot of value that's building up,
Yeah.
because it's just like you're winning infrastructure. I understand winning infrastructure. It's just a time play. Like for me, building a network is not an overnight thing. It's a consistent month after month hit the markets. That's how you build traction. So looking at some of the financials as to why I personally don't like it, just the gross margins are 22%, right? And then you bring it down, I think their operating margins are 4.1%. So very thin, but if they win the marketplace, then I think it will unlock new opportunities, and they're essentially, their business model will reset at that point to something else. Revenue, profitability, cash, I won't read it, it's a little too long. Again, more operational summaries in terms of like how much they're producing. This chart was interesting to me. So right here it says Fremont. So in Fremont, they produce about 90,000 S and X model. For Model 3, they produce 350,000. So they have a new factory that's going to produce, it's pre-production, but it's going to start producing 150K. And so just kind of reading around, they say it's going to be cheaper there, but this is the expansion that they have in terms of like other locations. So Europe and then US.
Have you seen at Fremont, the cops were using Tesla cars?
Are they really? I have not seen that
I've
yet.
seen Tesla cop cars, and there was an
Really?
article where it ran out of battery, but they were trying to go on a high-speed chase, it ran out of battery.
Yeah, yeah. Okay. Yeah, I did not see that. It's great marketing.
Because it fits in, right? Because cops have laptops in their
Yeah.
cars.
So if you ask me, the way this is a very different type of stock than usual, right? You got a leader who is like worship basically, and he's got a following that will keep it alive. He has diehard fans that will keep it alive. Versus like I don't see a stock like, I don't know, like some stock that's like decaying and no one's trying to keep it alive. I think if the stock goes down, he has fans that will just put money because they don't know any better. So I think in this case you probably have to play the situation, play the technicals. The technicals are being very honest right now.
Also, big guy like Larry Ellison, he came. He said he's investing $2-3 billion. I mean, there are a lot of leaders out there. They just believe in him.
Yeah.
He's the guy.
Yeah. Well, I mean, realistically, if he wins this production, then his company. The only thing that could stop him right now is a global macro pullback. If we have like another recession, he's going to be in the tightest situation ever.
Well, so investing in Tesla now is like investing in Intel in 1980, right? So you're kind of betting on computing power will be standard. Everyone's got a Mac or a laptop or whatever. That's the norm. Whereas if you believe that the Tesla DNA will become 10 times more broadly used in 2030 and beyond, then that's a safe bet. So put a certain percent of your portfolio into that based on what you believe the company in that industry will do.
Yeah. Even then, I'm still kind of scared. I personally wouldn't allocate a lot to it.
It could be the next Apple.
But I see the momentum kicking in really hard, and if you want to perform a little bit more broader technical analysis, I'm seeing a reversal right here, high volume. On the weekly, doesn't say much. On the monthly, I think this will start, trending up after a retracement. That's what I'm saying.
So I was a firm believer from day one with Elon. So I invested on IPO price.
Yeah.
And I just put an order, open market order to buy on Monday based on this profit. So they proved themselves. They said they can. They need, if they want, they just don't want to be profitable because they want to keep expanding. They just want to spend money on R&D. I mean, they're opening a gigafactory in Shanghai. That costs money, right? They have to staff it, right? That costs money. They could have said, okay, we're not going to do that. We're just going to focus on profit. That's a short-term thing. But if you think in long term, they're talking about building another gigafactory in Europe. So they're really going big.
Yeah. I have a question for some of the technology people in here. So let's say as a human race we actually succeed in deploying autonomous vehicles. How would the world look differently today? People will work even more for sure because the vehicles are driving on their own. But how will it look in terms of like everyday life? Like you would order your Starbucks in the car. Like you'd be like, hey Tesla, order me a Starbucks. The Tesla drives you there.
You go to places where you never went before.
For sure. Oh yeah, for sure. And
No, what I mean by that is like right now you restrict yourself, saying I'll be tired. Like, if I want to go to San Diego, it's going to take me a long time driving. I'll be tired, right? But you don't worry about being tired. You just sleep.
Yeah. So looking at the tightness of the economy, right? So the whole minimalism is like a super topic among millennials right now. So I feel that the human clutter or the human things that we consume, physical things we consume, in this tight environment, is going to be less and less over time. So human beings are going to be more mobile, right? I'm seeing the culture of the next generation. They're very like, oh, I'm going to travel and do all this because they can't afford real estate. But then if they can't afford real estate, they can't afford spaces. If they can't afford spaces, they won't clutter up. So they're going to be very light, and I think it's going to be a very mobile world moving into. This is just speculation on my part.
Just take a bet, by the way. How many days will it be? How many months will it be before the first law firm commercial is? Have you been involved in an accident with a self-driving car? Call the lawyers and whatever.
Legal conflicts will evolve with technology for sure. So it's interesting to kind of see where it's going.
I think this will be government regulated because it's a human hazard, right? Like you could die in a car if the machine doesn't know how to drive properly. So I think they're going to disallow people from using multiple different algorithms. There's going to be a standard that's approved by law, right?
Someone has to be a leader in that space to.
NTSB has already allowed self-driving cars to operate in certain states, for a certain duration of time for certain application, and it's already going on. It will go on for another 3 more years.
And there's so many interested players in this, right? Semiconductors are massively interested in this. They want this to happen because it's where they're gonna get their money, right? Did you have a question, Beck?
I'm not sure if you saw, but did you see the self-charging where it actually charges by itself?
Yeah, where it just sticks it into the Tesla. Yeah, I saw that. Yeah. Keep in mind autopilot, full self-driving vehicle software. Software is very important. And then the powertrain, they have the best EPA, or the range in miles. Other highlights, so this is the mega pack or whatever. This is the other thing that they're selling, energy. And then also insurance. So if they get into insurance, that's actually that's debatable. That could be a decent business, but it makes sense because they're the only supplier of their product. If they game that, then yeah, they have a monopoly on insurance. Like, hey, do you need to insure that? So that's another way to tap into more money. From the purchasers of the Tesla.
You need that cash flow now, which is perfect for an insurance company.
Yeah.
You get the cash flow up front, and then the liabilities come in years later or months.
Yeah. So the other opportunity here too is that if they really automate the vehicle, it's like, okay, would you like the ad-free Tesla or Tesla with ads? If you want the ad-free, you gotta pay a little bit more. Right? Because it's like you can't just sit there for free and do nothing. Right? So it's like if you're sitting there, you're consuming ads on your phone, but now they're like, hey, divert your attention to the Tesla ad. Things are changing pretty quickly, I feel. Vehicle outlooks. I think you guys should read this part. I'm just going to show you some pictures of the Shanghai Gigafactory that they have right here.
And they built that in 10 months, by the way.
Yeah,
It's from
yeah.
pile of mud to this factory. That's how.
Yeah, that is pretty hardcore. So this is a Shanghai factory. In case you guys are wondering, this is what it looks like. I thought this was pretty interesting because someone like me in software, I don't normally dive into like the world of robotics. But looking at this stuff also gives you ideas, right? Like, oh, they're using KUKA. Maybe that could be like a potential company to invest in, right? But this is how I think about it. Of course, there has to be like a robotics software and all that too. Ways to invest around this.
And also they were able to bypass US tariffs.
Exactly, yeah. And they're gonna supply the whole Asia Pacific with the cars like them.
Yeah.
Yeah.
So has anyone been tracking Neo?
Kaboom.
That's a sad story.
That's a sad story.
That's a sad story.
Yeah.
I don't think they're gonna make it.
Now keep in mind, do you know who venture invested into Neo? Yeah, it looks pretty depressing.
10 cents invested a lot of money.
Yeah, exactly. So, and this is government supported too.
Yeah.
I know that. 10 cent is basically government at this point.
Yeah, right.
Anyways,
Frightening that you lose 90% of your investment in less than a year.
yeah,
So buyer beware, right? That's
Yeah,
when you're
seriously.
betting on a story that they're the next Tesla, and you just lost almost 100% of your investment.
now, I don't know much about Tesla, but can you easily replace the battery?
The car?
Yeah.
Yeah, you can do that, but then.
So does that increase longevity of the car? The life cycle of a car.
Yeah.
So you don't necessarily have to recycle a new car, new engine, all that. You just replace the battery at this point.
Right, and now I heard that even if the battery life, I think is at 200,000 miles.
Yeah.
Then they will recycle it to the power walls,
Right.
so they won't say,
Okay. Yeah.
It doesn't need oil changes.
An electric car is extremely simple.
Yeah.
Extremely simple.
Yeah, very simple. So I can see why the comparables. I mean, we looked at the market comparables over here, right? You can just see why the other valuations over here just trading close to book value, below book value, and below price of sales. Right, it just goes to show that maybe that market's being shorted or just not as popular anymore.
And they cook the book,
Can they what?
cook the book.
Cook a boat?
Cook books.
Accounting book.
Can they cook the books? Tesla? I mean, anyone can. I don't know.
They cook
But
the
now,
book, then what happened?
Earnings is like putty.
You know, like Tesla is the most difficult roller coaster out there because there's a lot of credible people that I respect that are shorting Tesla, and then a lot of credible people who are long Tesla. So when I see a situation like that, I don't really want to play, but I just want to observe for my lessons of the future, right? All the experience and knowledge you build today will help you in your next trade.
Like people think we live in a world of innovation. I kind of a little disagree. I think it's the business models have changed, right? Like if I buy a PlayStation 4 for $400 and I'm selling it for $25, I'm gonna get a lot of sales, right? But now I'm not making any profit, right? So a lot of companies like Uber are generating a lot of sales, but not any profit because they're trying to undercut the competitors and take them out of the market.
Yeah.
So it's not necessarily their innovation that's doing it.
Yeah.
They're raising capital from equity,
Yeah.
right? And they're losing money, and the competitor is not gaining capital from equity.
Yeah.
And so they're out of the market because they're using profits.
Yeah.
So it's not necessarily Uber is better than cabs. It's that they just did a business model, a very shady business model tactic to go public, raise equity through going public, and selling the product at a loss.
Yeah.
You see
Yeah.
with
So
Tesla, right?
from
Self-driving car, this car is more than what it's selling for.
yeah.
But he's selling it for a loss to gain market share.
Yeah,
Right.
yeah, exactly. So the shady games are the ones who are trading around this, right? They're trying to capitalize on the short movements. But you're right. Like what I'm observing in the space, in the tech space, a lot of them are just playing very tight, not making any money, but it's just to acquire market share, acquire users.
Yeah, and they're getting the money from the stock.
Yeah, I guess this is a classic example of like Facebook. Look at
Wall
Facebook.
Street pumping it up.
Yeah, well, look at Facebook today. Facebook today is widely profitable, but in the beginning they were just chasing the users. Again, software is always a user's game. It's all about how many people are engaged
But they're
in the
not
software.
paying. What I'm trying to say is they're not playing a fair capitalistic game.
Yeah,
Right? It's not like they had a better product is why they're better.
yeah.
You know, it's
Maybe I should make some software for this
sell
investment
it for a
purpose.
loss, go public, and you'll take anybody out of business.
Yeah. So again, if they make this true, right, and we actually become an autonomous vehicle economy, then they actually commercial real estate will get even more valuable because it's like what percentage of a retail center is a parking lot? that could be turned into like a playground for like consumers. There's a lot of untapped value if they make that succeed, right? Because I'd be like, well, these commercial real estate guys don't know that they could be turning the parking lot, which is like 50% of the whole piece of land here. That's like 50% extra value, and then sell it to the next person, right? That's some, awaiting opportunities down the road. Some more pictures, the Gigafactory. Again, the air quality I noticed in this picture. And then January, right, until October. You said 10 months. This is 10 months later.
Yeah.
They could have built it at one of the ghost cities.
That's incredible.
That's true,
Do
huh?
that unless it-
Yeah, build it around a ghost city, turn the city into functional utility. So I say take a look at it. But that's all I got for Tesla right now, guys. We talked a lot about that one, and kind of avoided some of the stuff that I was going to talk about today. Let's see. Let's see where we're at, and I'll breeze through the charts because I'm assuming that the people in here know your technical analysis already.
Did you get a new watch?
I did. Thanks for noticing. Yeah, I'm more into gold today than ever because it's I guess if you truly understand gold, it's a very sophisticated instrument. I feel sophisticated in the sense that it's the asset of like the beginning of time for us and all that, and it's the whole concept of trust and stuff. And when you have a sovereign that devalues your trust, that you trust that the dollar is good, but they devalue what you work for, then what are you working for at the end of the day? Like how do you secure your value? So gold's becoming. I think I caught the gold bug. If that's what you want me to say, yeah. And speaking of gold, let's jump into that. But let's do some quotes. The two things in life you are in total control over are your attitude and your effort. Right? It doesn't matter how wealthy you become. I personally think the people who are naturally humble and have a great attitude and put in a lot of effort into engaging with people are the cool people to me. Some other motivation and success: 10 ways to make progress. Wake up early, read daily. I wish I could read more. 3, eat well. 4, love yourself. 5, judge less. 6, be yourself. 7, set some goals. 8, have a positive attitude. Number 9, network. And then number 10, fail fast. I completely agree with failing fast. I think culturally, from mass culturally, I think a lot of people are just afraid to fail. But in mathematics or science, it's called trial and error, testing, right? We test, we fail, we test, we fail, and then we succeed. So getting used to failing, right? Don't be afraid. That's my take. And then I wanted to show you guys this Silicon Valley map, how dynamic it is. As you can see, like it's pretty clustered, and I don't think this cluster will move easily in the next 10 years. So I think that human capital will remain, and it's getting pretty exciting. Again, we're going to be hosting the mixers in Palo Alto next, so that's where I'm targeting all the investors over here.
That's great.
Yeah.
It's not even taking into account all the biotechnology companies.
Oh yeah. Oh, so I didn't know about that. I do know that they're here, right? If you drive down 237, there's that new one. It's called that new building next to Dell. You know which one I'm talking about? I just saw that they put up their sign, and I'm like, oh, it's a biotech company. Very dynamic stuff here. Market update. How do I feel about the markets? It looks like since October 11, the printing of more money, getting more bullish. But I'm focusing more on value stocks or dividend stocks, as well as basic materials like gold miners. I'm very heavily invested into gold miners right now. That's my primary play. It's interesting.
Well, it's a fascinating time, right? I've like a broken record, like I've said before.
Yeah.
No one ever goes back and says their predictions are going to be wrong. When they said that, September is going to be the big drop, and then October is going to be the big drop, even though it's likely to hit an all-time high next week. And we've had, in the last week, 140 companies are going to come with their results this week coming up.
Yeah.
And to date, this quarter, 78% of all companies reported met or beat their overall targets for earnings. So let's just assume that of the 140 that announced this week, that wrap up October, October basically meant that almost every 80% of the companies did incredibly well, beat the guidance, revenue growth, earnings growth, and so on. So what does that mean for the overall sentiment of investing for November, December? Is it going to be, the economy's going to tank now in November?
Yeah.
Or is it, well, wait a minute, if all the guidance and earnings are positive and they're better, then maybe this whole idea that we gotta have a downturn eventually is not really the case, and that November, December will continue.
Yeah.
But who knows?
Yeah. So the way the markets have been performing now, I think there's another one down here, but this consolidation 2015, and then we have this consolidation today, and then as you can see right now, we're getting to new highs. As much as I hate to say this, with the the tailwind of printing of money, right, massively printing a lot of money, it's good for gold. Gold's still good. It's still a major play because we're engineering this higher move here, just like how they engineered ghost cities in China, right? I as much as I hate to say this, I think prices are going up, and maybe the next 6 to 12 months.
You know what? I don't know what your name is, sorry. What you were Hinder?
Yeah, INDER.
What Inder was saying was that you can't go wrong with almost investing in anything.
Yeah.
And I mean, and generally speaking, if you spread your investments over 50 companies that are profitable and growing earnings,
Yeah.
and between now the October month and the following months, you probably will do well. You'll
Yeah.
probably do remarkably well if you pick companies that are stable, growing, positive, just not the Beyond Meats that you don't know, those are wild cards, but the ones that are just sort of the proven stable companies, you'll probably do incredibly well.
Yeah. Well, Beyond Meat's puts it's a clean put, right?
95% of a long-term move is based off earnings growth in the business.
Yeah.
That's right.
Right?
So-
The 5% is just noise called speculation.
Yeah.
That's right.
Now when it comes to software, there's no such thing as earnings.
What do you mean?
Yeah, so what
Software
I'm saying,
companies.
but that doesn't mean
Like
rapid
Twilio or
speculation can
MongoDB.
take over, right?
Say again?
Speculation can take over, but it's
Yeah,
future earnings.
yeah.
They are-
So it's a different environment, different game. If you play like Twilio and MongoDB and stuff, it's a sales game, sales momentum game versus an earnings momentum game. Yeah, but you're right. If you find companies that have earnings momentum, income momentum, solid balance sheet, yeah, they'll just keep appreciating.
So like Apple, for example, does their earnings on Tuesday, I believe, or Wednesday.
Yeah.
Or one of those.
Yeah.
So if they beat their numbers again
Yeah.
and say that the Christmas season will be spectacular, then you can expect all of the Christmassy companies, Target, Walmart, Amazon, all others will suddenly
Yeah.
track along with that.
Yeah, yeah,
So,
Yeah, so very hard lesson I learned a while ago
yeah,
is avoid commodity-based businesses when the economy's doing well. Buy them when the economy's not doing so well.
Well-
So if you're not really sure about the
So that's
market's going
that's
well,
true.
yeah.
But then they also say consider commodities-based businesses when you say the economy's not doing well, and when the economy's not doing well, they devalue the dollar.
Yeah,
when-
so- but if
but
you
right
look-
right now they're devaluing the dollar when
If-
the
if-
economy is doing well.
If you look
Or
at
stocks
the
are doing well.
corresponding period of every time the S&P is going down or flat,
Yeah.
oil companies are rising, natural gas companies are
Yeah, yeah.
gold miners, silver miners,
Yeah,
left and right,
yeah.
right? But when the S&P is rising, majority of these are going bankrupt.
Yeah.
There are billionaires who became billionaires from oil now are literally bankrupt after the S&P started going up.
Yeah, yeah.
Right? So, if you had to, I mean, of course there are exceptions to the rule.
Yeah.
You know, Kirkland Lake Gold maybe, or others, but I would say as a whole, it's a gamble,
Yeah,
right?
yeah.
It's definitely a risky, unless you're 100% sure that the average American business is not gonna grow in the next, few years.
Yeah, yeah.
You know,
I mean, the economy's weak, right? Because we're printing money. They only print money when the economy's weak.
the economy's weak right now?
I think it's really strong. All my businesses are actually breaking records in terms of
Local
earnings.
business or you're talking about stocks?
My stock businesses, right?
Yeah.
They're actually breaking records in earnings.
Okay, I'm sorry. Let me fix that. Not economy. Global macro is weak.
Global
But
macro
that's-
is definitely weak.
Yeah.
Yeah, global macro is weak. My bad. It's very weak, right? Dollar's weak, but some businesses that are great at capturing money will keep capturing
But
money.
that's
It's,
been happening since the beginning of time. I mean, McDonald's was probably 5 cents at one point. Now it's like, what, $5 a burger maybe?
yeah,
I mean, that's not gonna change. That has been happening for 30 years or more, right?
yeah, yeah.
So it's not anything new, I would say.
Yeah, so let me give you my take on this, and however you guys want to see it. I'm still underneath. I'm still a little scared, but I have to play the direction of the markets, and it looks like the markets wants to go for that legendary breakout over here, right above $300 or $3,000 for S&P 500.
Absolutely.
If that's the case, then Yeah, we've been going sideways for almost 2 years, or about 2 years. So I think, last time we moved like this, we went up like 34%.
See, but
Right.
that's the downfall of technicals. Technicals, it factors in speculation, right?
Yeah.
So,
Well, this is technicals with the assist of like government printing.
yeah.
Yeah,
So, but if you're looking at, the price follows fundamentals ultimately, right? So if you're looking at look at the S&P, look at the business earnings of the S&P,
Yeah.
right? You'll see it's growing actually. So prices just hasn't caught up yet, right? So, because the technicals, people invest based on PE ratios, things like that. They speculate a lot, right? They're not actually looking at the underlying business factors and things that are actually driving the price, right?
Yeah, yeah. Well, okay, I think it's been a while for you. You haven't heard the like where I'm kind of at. So right now, my thinking is global macro looks very bad, and so they're already devaluing the dollar. So it's very good for gold, very good for basic materials, very good for, I'd say, probably S&P 500, because S&P 500 is like the 500 best stocks. But right now in the software space, it's kind of slowing down. Software is like the high growth momentum. So what I'm trying to say is that I'm shifting away from growth stocks to more value stocks. Overall, I think the markets will go up because, again, money printing. But you have to be careful, because that's going to create wealth inequality. And the money printing causes the dollar to go lower. So if the dollar goes lower, I'm also bullish on emerging markets. So emerging markets is definitely a play right now. So countries from everywhere from China to India, I think are great opportunities for upside. Securities to consider. That's currently where I'm at. The only thing, right now I still feel very bullish on gold, because markets go up, markets go down. It's in a win-win situation. I'm trying to think if I'm missing any other segment. Industrials I like, energy I like, and that's pretty much it. That's where I'm at, and I think markets will go higher. Any comments on that, or?
Well, you probably.
I'm just going to continue the discussion over here. So this is a risk on, risk off indicator, right? Stocks versus bonds, stocks versus gold. SPO is basically SPY over gold, and then real estate versus stocks versus real estate. So it's starting to point up now. So meaning people are transitioning over to stocks, but at one point it was starting to look pretty scary the last few months. So it's looking like risk on again. Looking at the dollar index, the dollar did go down since October 11, so that's when they announced more money printing. And we're having a bounce right here at the 100-day moving average. That's all. If you're watching gold, this is gold could be sensitive to the dollar, so just sharing that. S&P 500 is double top right here, objective charting, right, from the computer. I think we could go higher. If I'm wrong, then more volatility. But overall, everything's kind of pointing at higher prices. The government cannot. I came to the conclusion that the government can't go out of business. They don't want to go out of business. If they let markets drop, they go out of business. It's just going to look really bad. So they're just going to devalue the currency base and cause markets to go up. NASDAQ, again, breaking the new highs right here. You see that right there, that little peak? It's a strong close, so looking bullish from a technical perspective. Dow Jones, kind of almost there, but I think they're going up. Russell 2000, the laggard, still choppy, right? Again, Russell 2000 is a smaller cap. Looking over across the world, Nikkei, so Japan's going higher, right? International markets are going higher. Stocks 50 going higher as well. This looks very bullish, right? Holding the 200-day moving average, bouncing off the 200-day moving average, and just pointing higher. Could go down a little bit, but I think the direction now is breaking out right here. It's going to go higher. So the rest of the world's moving up. That tells me S&P 500 most likely to move up as well. DAX, again, German DAX, reverse head and shoulders right here, breaking out, moving higher. So you see how I just don't look at the USA markets to figure out like, okay, are technicals telling me to go higher? I try to look at other countries as well. So it helps when you look at other major economies. And if you're using this from a day trading perspective, then you could be like, okay, if around the world has sort of a bias to go up next week or whatever, then USA should go up, and then you could day trade the next week that way with that bias. No more yield curve inversion, right? But markets are pretty high. I just wanted to give you guys an update on bonds. Some of the money managers are bearish on bonds just because of this printing of money and lowering interest rates are kind of getting out of control. So bonds are looking kind of scary according to them.
Can you explain that yield curve subject of why that no longer is a concern, and what would have been like, oh, the sky's falling, only a month ago and now it's suddenly solved? What solved it?
What solved it?
What changed? I mean, why is it no longer, what was going to be, oh, look, 10 times in a row the yield curve has predicted the downturn and the sky's falling, get out of the market, whatever.
Yeah.
And now suddenly you're saying the problem is solved. So what
I'm not saying the problem's solved, right?
And no longer
And the other thing you gotta be sensitive to is that the yield curve fluctuates.
Right.
So it could go inverted, not inverted, not inverted, right? So it's just, it could be a temporary condition. But to explain, your question is, like, what's this whole concept of like bonds and stuff, or what's the question?
Well, so what fundamentally removed the problem of the inversion in such a brief amount of time?
Sure. Now this is more complex. So we go into it. You have to understand the let me see.
Wasn't it all the money printing and just this idea that the central banks will do everything in their power to hold up the markets?
Yeah. So So now I have to recollect. Okay.
I guess the thought is, how vulnerable are we for this to suddenly come back as another problem, and then people are fearful, right? It's sort of like the sheep mentality. They hear 100 people saying, oh, look, it's inverted again, and even worse, and now the sky's really falling, and suddenly everything falls apart.
Yeah, so when it's inverted, right, so you have to understand down here, these are different bond contracts, right? There's the 30-year bond, the 20-year bond, the 10-year bond, 7-year, and so forth. So when we get inversion, it's basically saying that the shorter end of the curve is pointing up, meaning like people are kind of getting scared and running to that, or interest rates are going up, right? But they could engineer this to go down by lowering interest rates or printing more money. When you print more money, the dollar looks less attractive. If it's less attractive, it's paying less interest. It's a lot of mechanics going on that you're asking me.
Okay, well, we can skip it.
Okay. So the concept is basically, typically when we have an inversion, it's just showing that the pros in the markets or the bond traders are getting scared. That's all. But right now it's showing that they're probably not as scared anymore. Things are kind of cooling down. But it also could be short end manipulation from the Feds, who are buying T-bills and all that. Yeah. So it's more of a complex subject. I don't want to go too deep in with the time we have. It's like a 2-hour session plus of its own. But that's an update on the yield curve. Volatility, quick update as well. It doesn't look fearful in the volatility space, right? So what am I doing? What did I just do? I looked at the American indices, S&P 500, NASDAQ, and all that. And then I look at the international indices. And then I look at the bond players. And then now I'm looking at the volatility derivative players. Right, so I'm just kind of getting, hey, what's your take on the markets? What's going on? So their opinion, the volatility investors or traders, they think the markets are not that fearful either. So it's pointing down, and everything's green across the board. Looking over at emerging markets, so emerging markets looks like the trade is live now. So I would consider long here if you're looking at emerging markets. This EEM is like a great long-term hold, educational opinion only, but when we looked at Ray Dalio's portfolio, he's full of emerging market stuff. If you guys want to see it real quick, I'll show you. Ray Dalio, current portfolio. Oh, I'm getting a little hungry over here. Let's see, shares. You guys hear my stomach growling. Yeah, so this is Ray Dalio's portfolio. He's managing, well, it shows 12.75 billion here, but a bulk of it is right here. He's 15% invested into emerging markets. 15% of his portfolio. And then the other 15% is long S&P 500. Right? So he's long S&P 500 and he's long emerging markets. And then he's also long gold. Though he's more bullish on emerging markets. So that I think that kind of reveals the investment thesis, right? Them printing more money, cheaper dollar is good for emerging markets. And that's where Ray kind of sees opportunity. Looking over at Asia, China, A shares, or the quality shares in China, FXI. This one I'm looking at positioning as well. This one looks good to me. Asher, Shanghai, looks good to me as well. And then India, just want to show you guys the charts, what it looks like. Again, we're kind of breezing through because I want to finish this. Precious metals, a little update. So gold this week made some moves. Looks pretty exciting. I think some of the people in here are kind of like, no, it's not a real move. Or any opinion on that?
I don't think it's a real move.
You don't think it's a real move?
No, I think the recession, which, I mean, we had a recession from 2000 to 2014, which is why gold went up.
Mhm.
out of fear. But I think that rally has ended, you know, and I think people are just at this point just hoping that it's still gonna go, but I think that rally ended.
Sure, sure. I think that's a fair statement. Yeah, I think we should watch gold closely here for like, you know, a potential breakdown.
I think it could go sideways. I mean, you could make money, but it's probably gonna range.
Yeah, when I look at gold, I'm looking at the fundamentals of like the currency base, right? It's just like how when you look at a stock, you're looking at the earnings.
Right, right. But if you're in like a gold ETF or something, right, it's based off some demand of its shares, right?
Mm-hmm.
So if most of the assets are going towards like businesses and S&P and all that stuff, then there isn't much fear. So you know, people say like, oh, you know, silver's cheaper than dirt. Well, there's a reason it's cheaper. It's because people aren't fearful, right? So it kind of gives you an idea of the sentiment that it's, you know, and I think people are thinking fear is building up because they're looking at the technicals.
Yeah.
But I don't see that happening.
Yeah,
You know?
yeah.
So that's why I think this is a fake move. You know.
Okay, okay. Yeah, for my take, I'm just gonna hold the technicals right here. I'm still in position. If it doesn't go well here, I'm feeling like maybe I should just size out a little bit. But I still hold a core position.
Not to say it can't go up in the next few months or whatever. But
Yeah.
I'm saying is like as far as a long-term secular move, I don't think that's the case.
Yeah, the justification for a move higher here for me would be the October 11 announcement, just like the whole printing of money. Silver, this is what it looks like. So we had some moves here, some decent volume of silver. Silver is the more leveraged instrument compared to gold. Looking at platinum, so we looked at platinum last week. Platinum performed this week, so I'm still playing the trend line right here. If you guys want to play platinum, there's PLTM, that's the ETF. Looking at gold miners, this is what I'm seeing for gold miners. So we're breaking out this descending triangle right here. So break to the upside, not to the downside. And then gold miners junior, falling wedge right here, breaking out to the upside. So typically from a technical perspective, this is bullish. Holding the 100-day moving average over here, and also holding the 100-day moving average over here. And then some specific gold miner securities I'm paying attention to, a little update. Here's an example of falling wedge again, breaking out, some decent volume to the upside. So Agnico Eagle, one of my favorites. Kirkland, this one is kind of going sideways, but at one point broke up the descending triangle, or the falling wedge right here. We'll see where it goes. Still holding the 100-day moving average is what I'm watching. PVG, here's another one. Nothing much to comment. Holding the 100-day moving average, flirting around with the 50-day moving average. BTG, so this is one of the favorites that I'm kind of building up. Nothing much, just still in this descending, falling wedge type of pattern right here, or symmetrical triangle, however you want to draw it. And then pass, silver. So here's another one. So this is typically for me, whenever I see this type of move, break of a trend line on some decent volume, I get bullish. This is like my personal indicator of like getting long, right? So when I have like a solid trend line like this, and then I see a aggressive move like this, and then some volume, that's typically where I get long, right? For a swing, because it could be like, I'm patient with it, but I'm expecting higher prices for that. So that also means I see higher prices in silver. Same thing with the cryptos. If I were to go back to Bitcoin real quick, if we go down to the hourly, I know the charts won't show it too well, but typically when I see something like this, I just kind of hold my breath and just take a position, like no questions asked. But now it's kind of becoming automatic. So I took position there, still holding, and we have a rounded bottom here, so I anticipate probably higher prices to come with the bullish announcement in China, as well as the printing of money. NEM, so another favorite right here. My GG shares got converted to this, so I hold this. Newmont, so I like this one as well. And then this is a smaller play, 50 cents type of play, but this is owned by not Paul Tudor Jones, the other guy, John Paulson. He has a significant position in this one, so I still hold this one. KGC, this is, what's his name? Jim Simon's largest position. So Jim Simons is the quantitative hedge fund manager. Just showing you guys that this is a falling wedge, is breaking out to the upside, so maybe some moves in the coming days. Ego, Eldorado Gold. This one's starting to look good as well. Again, same pattern, falling wedge, breaking out to the upside. So that's a quick update on gold miners. AGI, that one broke down really bad. So I have calls on this one. So this one's against me a little bit. But I'm actually looking at adding more. So this is the one that's trading below book value 0.76. It's a strong one, but it's looking pretty beat down. So my take on it is if gold starts to move here, then this could be the potential bottom, but it's sold off pretty hard, I'd say. But say again, NG. Yeah, so I like this one as well. So they kind of all look the same if you think about it, right? Descending wedge, or falling triangle, or falling wedge, descending triangle. What am I saying? So it's above here. So typically that's a long indicator right there. So I personally would go long there. That's my take on it. The other stuff. So cryptocurrency. So you guys know about the headline, right? I was talking to Bernard about this earlier. Basically, China urges Bitcoin adoption for innovation. So you kind of see the market reaction over here. What was his comment real quick? China's president, we must take blockchain as an important breakthrough for independent innovation of core technologies, clarify the main directions, increase investment, focus on a number of key technologies, and accelerate the development of blockchain and industrial innovation. So, do you think...
It's unbelievable. Like a long time ago, they just try to like take every one of them down.
Yeah. So if I was okay, so do you think this announcement is saying that now he's going to take a position, or do you think he's been taking a position?
Yeah, there's a difference between Bitcoin and blockchain, right?
Yeah, there's a big difference.
IBM can use blockchain technology for databases.
Oh, yeah.
It has nothing
Yeah.
to do with Bitcoin.
Yeah.
So that statement really doesn't mean Bitcoin is legitimate anymore.
Yeah. So we're talking about blockchain right here. We're not talking about Bitcoin. Just to clarify that. But my question is, you think this huge public announcement, he's been taking a position or not taking a position? I think he's been.
In his Swiss bank account,
yeah. And if you guys know the dynamics of the sovereigns right now, right? So the government debt is basically too big and it's basically a bubble. But we don't realize the pain of all this debt because we have the world reserve currency status. So right now Russia and China are actually investing into infrastructures, like I said last week, that are acting as needles to pop that government debt bubble. So if we as a nation were to realize that debt, that'd be really bad. It's because we have a resource monopoly or a currency usage monopoly that we could do this. So what do you think would happen if we realized that? Like, oh, you mean I have to pay this debt through taxes now? I think taxes would increase significantly, maybe, or through hidden methods, further devaluation of the dollar. So that's really the thesis behind gold as well as Bitcoin. Bitcoin, it's just, when I look at Bitcoin, again, it's besides all the other fundamentals, just think about this. How do the dollar fundamentals look like compared to Bitcoin's fundamentals? You mentioned that Bitcoin doesn't have a balance sheet or income statement, but the dollar does, right? Which is the government balance sheet and Federal Reserve balance sheet. Income statement as well. It looks worse than zero. So that's really another justification for Bitcoin. Again, the other stuff is like mathematically bullish, demographically bullish, technology bullish. I say, hey, take a chance, but nothing more than like,
If the quantum computing comes around with higher accuracy, all this will bite the dust.
Bite the dust?
Yeah.
Yeah. Interesting. What else would happen to the way of life? SK is a big fan of quantum computing. I gotta talk more of that guy.
Did you guys hear about Google's announcement in the Nature's paper?
What's that?
That they made a new breakthrough at cracking something in 5 minutes
Yeah.
using quantum computing?
Don't you work at Google, right?
No.
Oh, okay.
That's why you have multi-factor authentication.
Yeah.
Supercomputing problem that used to take 10,000 years, that can go a solid 3.5 minutes.
Yeah.
But the problem is the accuracy sucks.
Okay.
Right?
So sorry, I want to kind of finish this out. So to tell you on the, this is the Bitcoin market cap valuation. Typically for me, again, this is my long signal when I trade or find a swing trade. Whenever I see significant volume and it peaks its head like this, I try my best to go long. Right? That to me is how I detect the same plays over and over in the markets, where it's just like, oh, a huge spike on volume, I want to jump in and play. And if it fails, I cut my losses.
So, okay, how much real business activity is done with Bitcoin? In terms of like, I know people own it,
Yeah.
so that doesn't count.
Yeah.
But I mean, the actual amount of velocity of who's using it to buy things or sell things or real business use of it.
Yeah.
Because that'll tell you if there's really going to be demand. If it's just a bunch of people playing a I hate to use the word pyramid scheme, that I'm buying it at 8,000 with the thought that some other
Yeah,
person
yeah,
will
yeah.
buy it for 9. That doesn't count.
Yeah,
But
so
it's like, is it growing in terms of like day-to-day use?
it's so you're thinking about individual individual person using Bitcoin. I'm not even thinking at that level. I am, but I'm actually thinking about the protection of these money managers buying Bitcoin. It's a big difference. Like you're thinking about what the average consumer would use for Bitcoin for like $1,000 use case. What I'm looking at is like, okay, this money manager is looking for upside, and he controls way more money than the average individual. And why is he piling into a Bitcoin trade? So I'm just looking at the bigger consumer here, not the tiny consumer. I don't think there's any like strong technological use case with Bitcoin yet, besides maybe like easy bank transfer and all that, which is pretty significant. But I'm looking at what the bigger players are positioning in. They're slowly accumulating Bitcoin, man. So I'm just being a trader at this
So
point.
you mean it's a store of value, right?
It is if you ask me what is the use case to the average person, probably nothing truly yet. But the average, the best use case to a money manager who's protecting the value of their people's money, it's a store of value.
Well, banks are gonna start using blockchain for sure.
Well, we're talking about Bitcoin. We're not talking about blockchain.
Yeah.
Yeah. So that's yeah. I mean, guys like Mark Yusko. That guy's like a big fan of Bitcoin. He's like the loudest person. I'm curious about his AUM. How much is he managing? You know this guy, right? He's pretty active on this guy's like crazy about.
Before, yeah.
Yeah, this guy's crazy about Bitcoin. I actually don't know his net worth. I don't know what this guy's doing. Let's see. After reaching about 3.5 billion in assets, I think that's how much he's managing. But I don't know what his net worth is. Again, I mean I'm just playing. I see. Okay, investment vehicle or not, I see that people are going to buy this up. And if I see that, I'm just going to trade it. I want to make some money. I mean, that's the most fair. It's like, I don't know how else to say it. And how do I evaluate if it's a fair trade or not? I look at the recent 1 month performance. I see Bitcoin perform about 18%. And I know typically this is like, not that big of a move in this market. But it is a break of a trend line right here. Again, I'm applying my typical technical chart technician stuff. This is telling me to go long, so I'm going to take a long and see how it goes. Litecoin, also again, fill in some positions here. This looks like a great trade. It's a trade, man. It's a trade. If you play technicals long enough, you kind of see like this is an opportunity.
Well, what we're seeing here is probably reaction from that Xi Jinping tweet.
Probably, most likely, yeah. Yeah. But remember why I told you that one day? I don't know if you were here, but it's like everyone's like, just cattle in the field and lightning strikes, and then everyone starts running. So this is that lightning strike moment, and I anticipate that momentum's going to follow through.
So based on those graphs, because someone in China says that Bitcoin is spectacular and so on.
Not just
even
someone,
those are
not just
45
anyone in China.
Someone's an important person.
That's fine, but 45 degree angle down for this and that, and suddenly it's like the sky is clear. It's now going to go back up to where it was. I mean, just because, really? I mean, that's amazing. It's laundry tubes.
Yeah.
Buyer beware. Just
Yeah. Buyer beware. I'm sorry. I keep bringing this up. I know you don't like it, but it's. I think it's just thinking about. I like to track all the asset classes out there and just kind of give it a fair, estimate or evaluation. So, yeah. Anyways, earnings. Okay, we only got like 10 minutes left. You guys want me to breeze through earnings? Because the highlight of today's discussion was just really this set of Incrementum charts, and it was really Tesla, which we covered. Do you guys want to hear about the quick earnings and just where the numbers are and where I see the securities? Or do you want me to talk about this new book that was released this month? It's by Incrementum. So if you guys don't know, Incrementum is basically the #1 trusted source that I go to. These guys are from Switzerland. They're like the research house for gold. Do you want me to go over the research stuff material? It's just like charts, or go through earnings? We could do both. Which one do you want to go first then? Just to be respectful of time. Okay, so let's start with the Incrementum chart books. If you guys want the link, let me know. I can send you the link. But I just basically took away some highlights. They updated their chart books. And I have the link. Actually, I have it down here. So if you ask for the report, the link will be down here. So yeah, I did some reading this week as well. So right here. Open that. So this is the 70 page report, all fresh, October. So let's look at some of Kay's highlights from reading this. This was my enjoyable read. A lot of them are, I'd say, probably repeats, but repeating helps you kind of improve your understanding of the concept. So this is their take, okay? For them to boldly, someone with that much credibility, managing that much money, to boldly state something like this on charts. Financial assets over households divided by disposable personal income. So this is the .com, this is the real estate bubble, and then this is what they believe, the everything bubble. Which, to a certain extent, is true because we printed money like never before, and that bled into every asset class as the logical consumer finds a way to find upside, right? And so, as an investor, I'm constantly looking for upside. If everyone's acting the same way, well, we're going to squeeze out all the opportunities, right? Like you see in the valuation of real estate. So it only matters until it happens, really. That's the saying. This part right here, M2 versus annual world gold production. So it's basically saying since 1900, there's been a lot more money printing than the annual actual gold production in the world. So distance here.
We're no longer in the gold standard. Production is not the key factor you need to be looking at.
What would you say is?
So the reason gold is valuable because it's a store of value purchasing power, right?
Yeah.
So the reason that that's the case is because there's not much of a supply-demand change.
Yeah.
Right? So it's called the stock-to-flow ratio. You can look it up. So the actual above-ground supply of gold versus the amount that's mined every year, the mining capacity is so insignificant compared to the above ground that mining has no effect on the value of gold. So it's not like diamonds, I found a whole bunch of diamonds in Africa, right?
Yeah.
It's not like that. You're not going to discover that much gold, and so hence the supply-demand of gold stays pretty much constant. So the production numbers, that's fairly obvious, that's been known. The reason gold is used as money is because it's been mined for so many years.
Yeah.
Right? So that majority of it's already out of the ground. So the mining capacity has little to any effect on the value of gold itself, right?
Okay.
So the value of gold remains constant, and that's why it's a store of value because of the stock-to-flow ratio. Whereas obviously the dollar is.
So how would you interpret this chart?
Supply and demand is different.
Okay, supply and demand is different. So yeah, I'm just looking at what they.
What I'm saying is this is always going to be the case. Like the world gold production ever since maybe 1700s is like this.
Yeah.
You know what I mean? It's not
so if there's anything about this chart, right? So maybe this could be subjected to S&D, supply and demand. How do you explain M2, the growth of M2, the growth of money supply?
Yeah, that's obviously.
If anything about this chart, that's a fact, right?
More lending happening.
I guess money.
Money is created through our system through lending.
Yeah, that's another way.
Right.
Yeah.
So that's the majority of how banks create money.
Yeah,
There's no
central banks lend to governments
The
through
government
buying
borrows from
treasuries.
banks, right?
Yeah.
So the banks are the ones create money in circulation through lending. So what you're really looking at is lending activity. Lending activity is rising, which is obvious.
Sure. They have a chart. They have a chart on that as well.
So
let me just continue this so we can kind of save time. If that's okay. The gap between monetary expansion and annual world gold production increased further in recent years. So this is the explanation behind that. Since 1900, the monetary aggregate M2 has risen almost 180 times faster than the annual world gold production. It's all about the relative supply curves. The supply curve for bullion is far more inelastic than is the case for paper money. It's really that simple. Dave Rosenberg. Looking over here at the next chart, S&P 500 compared to Fed funds rate. So this is just showing like in the tech bust, they lower interest rates. In the global financial crisis, they lower interest rates. We currently, for the first time in a while, lower interest rates. So since 2016, we've only been raising interest rates, right? And then now we recently lowered interest rates. So typically you lower because, can we safely assume the central banks are an intelligent entity, an intelligent sovereign global entity? So what is their logic behind lowering interest rates? So this is just a quick chart to kind of explain like, okay, we're doing that again. Would anticipation to further downside be reasonable? That's what they think, and that's why this game is becoming pretty hard for me to figure out. So I'm just playing the niches that I feel like has like the highest probability. So lower interest rates, cheaper money. Again, it supports the gold thesis for me at least. The following chart indicates that the Federal Reserve first Federal Reserve's first interest rate cuts have previously had negative effect on American stock market. History shows that when the Fed starts cutting rates, stocks decline. When rates stay flat or rise, stocks surge. That is contrary to the fables you hear from many analysts because declining rates are indicative of economic deterioration. Very, very true. So that's what I'm saying. Global macro is scary right now. There's decay. I've seen you guys seen the Purchasing Managers Index, right? The PMIs for the manufacturing. I saw the services one as well. I think they have it in here. I'll show you. Probability of recession. This is again fresh charts from them. Okay, guys. This is not Kay's message. This is just Kay's reading. Just to be clear, I don't want you guys to go out and be like, oh, this guy's preaching a recession or whatever. Recession probability, 12 months ahead. So another indication right here. So this was the 2001, and then this is 2008. Again, I'm going to go a little quick here. You guys could get the charts later and take a look at it. Other logic behind that, which you guys already know. So USA deficit is the gold right here, and it's projected to expand. So the government needs more money from us, right? And then total public debt is also forecasted to go higher. So again, what does this mean? Going back to Bitcoin, gold versus, or real estate versus the dollar. This is the dollar fundamentals right here. The dollar has an income statement and a balance sheet. It's saying that the government is going to accumulate more debt or needs more money. It's forecasting that it needs more money, and they've already publicly announced it. And this is the projected debt that they're going to accumulate. So they're going to write more treasuries, let's say, to finance whatever they need the money for. So again, same old story, decaying dollar fundamentals. This chart over here, recession is the gray. This is the one right here. So the manufacturing versus the non-manufacturing. So the services over here. So the gold is the services. At one point, the services was pointing down, but now it's spiked back up. But the manufacturing is still pointing down. So now you have perspective on both the manufacturing as well as the services. Going down over here, what can they come up with now? 5 ways for the Fed to further ease. Speaking of QE4, each QE program so far has been less effective in terms of raising consumer prices, falling marginal utility. An enormous asset price inflation has been caused instead. If markets are confronted with another round of QE, this might trigger a loss of confidence in the dollar and more inflation than is welcome. Think about that for a second. They don't want to call it QE4. And do you think that message is for consumers who don't pay attention to this stuff? Or is that message more for like the sovereigns of the world? Right? So like people in China or the other sovereigns of the world, like they're doing QE, but they're not calling it QE. How do I register this for a second? So that's something to be aware of. 0 to negative interest. So these are the weapons that they have basically, right? 0 to negative interest rates. Flawed models led the Fed to hike rates in December 2018, tightening into weakness, they perceive. In the coming months, the FOMC might finally have to admit that they do not see only a mid-cycle adjustment. Negative interest rates are increasingly being discussed. Currency wars, another way to get what they want. Cheapening the US dollar could provide some superficial ease. But how do you make the dollar cheaper when there's like pending global fears when people run to the dollar? However, others are trying the same, China, Japan, and Eurozone. If everyone wants to devalue, the only thing left to devalue against are gold and commodities. Okay, you want me to read that again? That was pretty interesting. If everyone wants to devalue, right? Because if the dollar they start devaluing the dollar, everyone else is chasing that devaluation or lower interest rates. The only thing left to devalue against are gold and commodities. Right, because like stocks and real estate are getting really expensive, so we're saying they're going to get more expensive. That's their logic, or that's how I interpret that. Forward guidance. So this is a cheap way of doing it, meaning like, oh, we're going to verbally say we're going to do this, but do the opposite. So that's a cheap way of achieving monetary policy. Possibly the first policy tool. The Fed assures that it won't raise rates in the foreseeable future. People will re-enter carry trades, short the dollar, invest in emerging markets for longer term. This tends to weaken the U.S. dollar and to import inflation. And then last but not least, QE for the people, helicopter money. Okay? Running larger fiscal deficits and monetizing the debt through central bank action could likely be the way forward. Contrary to traditional QE for the people implemented with tax deductions would likely be more effective in raising inflation. Money is definitely being spent. So going back to what I said at the beginning today, you know, where I tell you guys that I feel like my unborn kids are getting robbed in a way. It's they'll get robbed through higher prices because they're, you know, when they start working they can't afford it. That's kind of how I view it. It's going to affect the future generation. We're doing this to save the current generation.
Can they reset the game? Can they just?
No, we can't. We can't. I mean, if you resetting the game is a matter of like life and death, man. It's like, dude, like this big investor bought this big giant bond, and you're saying it's nothing now. How do I feel about this? This is a government bond that I put, you know, 100 million in. How do I feel about this? I don't care about that person who has $1 million. I have $100 million, and you're saying we're going to reset this. Why am I playing with the dollar? I'm going to take my corporation and go use something like Bitcoin to transact, because this doesn't make sense to me anymore. So the position of the dollar has to remain, but it's decaying because were you here last week? We saw, you know, the caveman in 3000 BC charging 20% for, you know, right? Now we're at like close to zero. So yeah, the game is decaying, and when they deploy QE, I realize that it's hurting everyone through taxes. We just don't know. Whenever the government borrows money, it's hurting us. We just don't think about it. We think about how high our stock prices are going. And for the people who don't invest, they think about how much more difficult it is to afford a home. So I think these social inequality or social conflicts will really rise more, and maybe that would make a great YouTube channel to talk about wealth inequality. Who knows? Opportunities, right?
Why isn't there uproar for the government to not spend as much money?
Why not to, you say?
Why isn't there uproar for the government not to spend so much money?
Uproar?
Uproar.
Uproar. Why, right? I'll tell you why. So if they don't spend more money on, let's say, defense, then lesser defense means China and Russia accumulate more defense. And if they accumulate more defense, then their currency looks more attractive because they could flex more, right? And so if their currency looks more attractive, then our massive debt becomes more real than what we thought it wasn't real, because we have the power to print. So if we're gonna have an uproar about, you know, this debt, well, it's like saying like my you know, this debt is crazy is the same as our debt doesn't mean anything. Or does that make sense? You see where I'm trying to go?
So the job of the commander-in-chief is to keep us safe from like nuclear, biological, cyber warfare, right? So they're going to spend heavily on military. I'm not too concerned with inflation because we export inflation, right? If you look at from 2000 to maybe 2014,
emerging markets is
all
where
our dollars to China because they've been giving us goods in return. All we give them is paper. They actually give us real goods and services, real stuff. So it's actually other countries are suffering. And so when other countries have a bunch of US dollars, if we want to choke them, we just devalue the dollar. So they're not going to start a war with us, right? Because majority of their wealth is in our currency, right? So I think we've been doing that for years. We haven't been a net importer, a net exporter since World War, right? We've just been importing goods. So we can print as much as we want, and we can just export those. We can buy oil from other countries. We can.
So that's the main issue right now. Like the rest of the world doesn't want that.
Yeah. So as long as the rest of the world keeps accepting our dollars, because America is the trade center of the world.
So that's my main concern right now. Like if they're working to make us realize our debt, how does that look on the governments?
And if we have more debt, the more inflation, the debt.
The bigger the bubble.
Less.
The bigger the bubble.
But the amount that we owe, it actually goes down, right? And that includes everyone who has a mortgage and everything else. So true, their dollar is weaker, but also their debt is much lower, right? Because the debt is not worth as much. So that's sort of the tactic that I've been reading. We've been going towards is devaluing debt, right? And that hurts other countries. But as long as they keep trading with us, there is no problem in America, right?
Yeah, but other countries are also devaluing their currency.
Yeah, but America doesn't trade the other way around, right? More people are accepting our dollars and giving us goods than we are making goods and giving to them and accepting their dollars, right? So there's a net effect of we are exporting more than we are importing, right? I mean, we import cars like Toyota cars and things like that,
let's finish this up over here, guys. So so these are updated numbers. The last 10 years of sovereign gold accumulation. Russia accumulated up to 2.2 tons. China from 1 ton to almost 2 tons over here. So that's what we're seeing. Other countries, India is also buying gold. So if you buy something like India, emerging markets, then hey, you're exposed to gold as well because they purchase gold.
Yeah, I want to comment on that actually. China
Sure.
is accumulating a lot of gold because they realize they have a lot of US dollars, and that's a ticking time bomb.
Yeah.
And so they don't want to be
Speaking of that,
exposed, yeah.
Speaking of that, Chinese and Russian U.S. Treasury holdings in U.S. billion dollars, BN. Russia and China, the largest foreign holders of U.S. debt, continue dumping U.S. Treasuries. Right? When you dump Treasuries, what happens to interest rates? If I'm buying it down, then I lower interest rate. Now I'm selling it. Prices are going down, so interest rates are going up. So when they're dumping Treasuries, it's causing our interest rates to go up. And then we're like, oh shoot, we got to go buy it. So you see the huge like crazy chess game that they're playing. It's deeply fascinating. Both countries have sold off U.S. Treasuries worth about USD 100 billion each in the last 2 years. It seems to me that our American partners are making a colossal strategic mistake as they undermine the credibility of the dollar as a universal and the only reserve currency today. They are undermining faith in it. They really are taking a saw to the branch they are sitting on. Putin.
He's corrupt though.
Hey.
All his money is corrupt money.
Yeah. Let's see. Monetary base, gold reserves in the marketplace. Another interesting chart. I'm going to breeze through real quick. Over here, I'm going to zoom in. Dollars of debt required to finance $1 US dollar to GDP. So we're at a record level, 3.8 US dollar required to finance $1 US dollar of real GDP. And you guys could read that. I'm gonna skip it a little bit. Let's see, gold / over monetary base ratio. So gold is really cheap based off of this. Again, just some fancy math to show you how undervalued it is. Let's see what else. Gold and US dollars on the left and silver in the right. So this is silver right here. I think you guys should read this. Maybe I could read it. Let's see. Sentiment indicator for gold, strong. It basically was just saying that silver is very leveraged to gold and indicative of like higher gold prices if it moves along those lines. But I encourage you guys to read it. I got to breeze through. Gold miners relative to gold. So GDX over gold, and then over here on the right is GDX juniors, gold miner juniors over gold prices. So if you apply technical analysis to this, the price of gold miners versus the price of gold, we do see that a potential bottom right here, and then we have a higher low right here, and it's sort of setting up. So just another fancy way of doing technical analysis on some mathematics. Yep. And then what else we have? Bull markets and mining shares performance is way below average. So this is the current performance we are right now in the current gold miners, and then it is statistical backtest of all the other years or decades for gold miner performances. So they anticipate a rip in gold miner prices. That's, again, revealing my trade or my investment position where I'm positioning myself. The cycles of market emotions and where they see the gold markets today. So it goes from optimism, excitement, thrill, euphoria, anxiety, denial, fear, desperation, panic, capitulation, despondency, depression, hope, relief, optimism. They believe we're currently at the relief stage in gold miners. So this is their drawing of it. 360-day moving average of gold. So they think it's desperation's over. They think hope is past. We're at relief. So what they anticipate next is optimism. This is from Incrementum. Again, guys, this is the people who taught me about gold and who I trust the most in terms of content out there. Commodities versus stocks, the lowest valuation since 1971. Again, commodities against stocks. That's all it is. And what else? Okay, so this is the last part, and then we'll, you guys could leave or whichever. The 8 bullet points takeaway from this, I'll read it to you guys. Number 1, the breakdown of trust in the international monetary order is manifesting itself in the highest gold purchases by central banks since 1971, and the ongoing trend to repatriate gold reserves. Number 2, so again, takeaway is gold. Central banks are purchasing like crazy since 1971. Number 2, gold reaffirmed its portfolio position as a good diversifier as trust in the everything bubble was tested in Q4 2018. While equity markets suffered double-digit percentage losses, gold gained 8.1% in USD, and gold mining stocks 13.7% in USD. That's funny, huh? Because in Q4 2018 they started, or was it Q2 2018? They started tightening, just to test out the waters, maybe. Huh? I gotta go back and look at that up. Number 3, the normalization of monetary policy was abruptly halted by the stock market slump in Q4 2018. The monetary U-turn that we had already forecasted last year has begun, meaning they start, instead of raising interest rates or keeping it sideways, we just made a U-turn and lowered interest rates. Point number 4, recession risks are significantly higher than discounted by the markets currently in their views. In the event of a downturn, negative nominal interest rates, a new round of QE, and the implementation of even more extreme monetary policy ideas, MMT, are to be expected. So they're gonna, they're forecasting that maybe potential new policies that we've never even seen before, like buying stocks.
What is MMT?
Modern monetary theory. MMT Investopedia. Modern monetary theory. I would read that up. And then the last 4 points. Number 5, the Belt and Road Initiative, BRI, aka One Belt, One Road, OBOR, or New Silk Road, is going to cement China's position as the world's top-ranked gold consumer, as well as producer, and will keep boosting physical gold trading at the Shanghai Gold Exchange. Regarding the process of de-dollarization, more and more countries are looking for alternatives to the US dollar, be it trading in other currencies, accumulating reserves of non-US dollar currencies, or buying gold. After several years of creative destruction in the mining sector, most companies are now on a much healthier footing. The recent M&A waves reinforces our positive basic assessment. The political and economic tensions between USA and China are increasing. These and other uncertainties, such as the worsening situation in Iran, should support the gold price. And that's their 8-point takeaway. Okay, all right, guys. That's pretty much it for all I have today. I was going to go and just look at some earnings if you guys want to stick around, but I feel bad for holding people longer than they came here for. So this part I'm just going to look at some earnings and share with you guys. Yeah, anyone's welcome to leave anytime, okay? Get water or use the restroom. Don't let me hold you back. Let's see. So some earnings. Let's see. Microsoft had earnings. I'm just going to be brief and kind of breeze through. I'm pretty tired myself. Revenue up 33.1 billion, 14% increase. Operating income increased 27%. If anything, if we're going to print money, I think Microsoft's going to break out and go higher here, right? So from a technical perspective, it's been super choppy, but I'm getting pretty bullish on Microsoft for the next run up here. If markets go up, this one is a must-have in my opinion. Educational purposes only. So I continue like Microsoft. I think it held really well in the periods of like August and all that when we had such a huge pullback in the markets. Stanley Druckenmiller, 20% of his portfolio, 20% of a world-class hedge fund manager's portfolio. Calls on this one. That's my take. Amazon. So this is what happened to Amazon. It was down, but then it rose back up. Again, just kind of testing the 200-day moving average, acting as major resistance to Amazon. Pretty smooth too, I'd say. Sales up 24%. ServiceNow. So this one's looking very interesting to me. I think this one's going to be a $200 billion company one day, meaning 4 times the price of this. Reason why is the CEO of SAP stepped down, well, towards the end of the year. He's going over to ServiceNow. So he's leaving a $200 billion market cap SAP company to another software company, ServiceNow, that's $50 billion.
Isn't it the same guy who was
the guy with the shades because he poked his eye out. And so I see a V bottom in the earnings over here. If markets are going up, I feel a little attracted to this, so I'm looking at taking maybe a minor, 25% position. Not 25% portfolio, but 25% of, let's say, if I'm taking 2% portfolio, then I'll take 25% of that 2%.
The Amazon one, by the way, is kind of a fascinating one. They missed their analyst target.
Yeah.
Right? So that's why the stock went down 9% on open, right? But then rebounds and ends up only minus 1%, which really tells you that people say, well, if their sales are up 24% to 70 billion, they're making whatever billions in earnings, like spectacular numbers. That's a good long-term hold. So of course people, wet their pants and they just unload it at the opening.
Yeah, yeah.
It was down 9%, it was back up and only minus 1%.
Yeah.
Right, so it tells you the belief in the brand.
Yeah, so if you ask me from a trading perspective in the recent earnings and the way I view it, check out the last time they had a V bottom right here, and then kind of went this way, right? So I think there is a trading opportunity in Amazon. If it clears to 1800, we could get some pretty fast move.
Yeah, I think it's really good time to buy Amazon.
Yeah, yeah.
If it drops again, buy some more.
I mean, you got some solid support right here, as well as macro support from the governments who are taxing you secretly. No one caught that. All right.
But here's the thing, is right. How easy it is to double $1. I mean, I can find $1 on the floor and double it, right? But how easy it is to double $500 billion?
Yeah, exactly.
Right.
So if you have growth expectations.
Yeah,
for a company-
24%.
That's huge.
Yeah.
Yeah, that's huge for a large company.
Yeah.
I mean, it's making what, like 250 billion in revenue or something? But, you know, it could reach 500 billion because that's what Walmart is making, right?
I don't know if it's 200. Is it 250 billion?
Yeah, I think so. Like something
Yeah,
like that.
230. Yeah.
Okay, so, just keep in mind that, like, if the sales are large, it becomes an anchor on it, right? Because it's harder to double larger sales than it is much smaller sales, right?
Oh, I agree.
Yeah.
Looking at ServiceNow over here, 45 billion market cap. It's very overvalued, right? If the markets were, I mean, I think software is kind of deflating right now, so be a little careful. But this new news with the whole Bill McDermott as the CEO, he has a track record of success. Makes me like, I want to take position, but again, I'm just gonna go for a smaller position. Earnings, so 33% year-over-year growth on that one for sales. Looking over, so this is Bill McDermott if you don't know the announcement. Looking over at PayPal, again, this is from a technical perspective. I see a trading opportunity break of a falling wedge, holding the 105, also above the 200-day moving average. I think there's a swing trade present here in PayPal, so I'm looking at options on PayPal. Growing at 19% revenue. That's amazing for this size as well. They're pretty large. So yeah, this looks like a long to me. I figure that if I show you guys what I think is a long and you play it enough, you kind of get the handle on the trading. Twitter. So Twitter did bad. What do I have to say about this? I mean, this is why you want to start off with like a starter position, 25% of a 2% position or 5% portfolio position. I still like this one, though there is downside momentum. So maybe hold back a little bit before I add some more. But I'm looking to add more on this one. So I'm still interested in Twitter. I think it's relatively price okay. I'm looking at resistance at 35. Right, 35 is the resistance. I looked at their numbers. To me, it looks pretty okay, right? Users are growing, and I think there's some great marketers out there that are using this tool, like Trump. So I still like this one. I think this, personally for me, I think this presents opportunity. If it climbs above 32, we could expect some retrace to 35. If it goes above 35, then 200-day moving average. If it goes above 200-day moving average, then I think it will continue its course higher.
Absolutely right.
But overall, I still like Twitter, and I think this is a great opportunity to consider. This is longer term, by the way. Not like a trading position. Intel, this one spiked up, so we talked about this one last week. If they're going to print more money, then the value names like Intel will go up. They had an earnings beat, so 6% year-over-year growth in their data center specific business, and they're kind of exiting their PC-centric business. So as you can see, they're piling into the cloud infrastructure of the world. That's where they're investing. Looking over SAP, since we talked about Bill McDermott, this one's my favorite as well. It's back above the 125, so I'm getting bullish on this one. This might not be a big position for me, but you can always swing a few contracts, do some long-term leaps calls on this one. I like SAP a lot. I think this to me is a test of the 200-day moving average, showing that it rejected the 200-day moving average above the 125, above the 100-day. I think this one could go higher. If not, then 125 is a consideration for higher prices. This one, cloud revenue up 37%. Gross margin up also 5%, which is pretty good. Snapchat, this one was pretty interesting. This one was like the last one I added in last minute. At the 200-day moving average, users are growing. I still don't know how big of an opportunity, but it's a little curious to me because I see a big fund manager holding a significant position in this one. So I don't know if you guys are long Snapchat, but I figure I wanted to put the numbers in here because I was curious to know how much it's grown. So it's grown to 210 million users.
Yeah, I think to your last slide, I think you have to be careful looking at net margins. I don't know if you use, but because
Well, I look
Because the
at
tax
margins
rate
down
has-
to profit.
Because the tax
So,
rate has actually lowered for corporate businesses, right?
yeah.
And that could also be affecting
Yeah.
results.
So
because of that, yeah.
the key thing to look at. So I'll look at the snapshot of the margins, but then we'll look at like 30 years of margins as well.
I look at more of like the operating margins.
Sure.
Because
sure.
that's pre-tax, right? I think, yeah.
Tesla, we already talked about. I think this one could sail higher just because the market response to this and the surprise beat. Again, valuation comparables, it's overvalued, but we have to ask why is it overvalued? It's probably a strong technology play. Thinking about how many players are really in the AV or autonomous vehicle space. How much of a beat? It was like about 150% surprise. And so that's how the markets reacted. And then you guys already saw the deck. We already reviewed this. Some of the highlights over here. And what else do I have? And that's pretty much it. That's all I have for today. 2 hours, 20 minutes. More training, right? Training helps the next investment opportunity you see. When I saw that Bitcoin move right here, I didn't hesitate. I was like, going long. Yeah.
So I think a good topic for next week would be to look at the overall earnings results of the collective couple of hundred companies that have come out, basically.
Hey, welcome, man.
Just
Yeah,
to see-
I wanted to show you the percentage of S&P 500 companies with pension funds still out there. 16%. I wanted to show you that. I was going to put that in this week, but I forgot. So, sure. We'll track the earnings results and see how it goes. But you guys know my opinion on markets and where I'm pretty much positioned now. Mostly gold, some cryptocurrencies, value stocks like AT&T or whichever, high dividend paying stocks. Energy looks attractive, emerging markets look attractive, and that's pretty much it. Yeah.
Man, thank you for all your hard work every week, man. You do all this research.
Yeah, it's
Dude, I mean, I also view it as training. Oh, well, you're welcome, but I also view it as training. So it's I want to get better at it, right? Like the more I could communicate the investment, it helps when you go out there and you want to fundraise. Let's say I meet investors and they got a lot of money, but they don't know what to do. Well, hey, this might be an opportunity. So yeah, practice the language. It helps you with fundraising, helps you with investing, helps you with not getting ripped off when you go out there by businesses and hopefully most of all by governments. Yeah. So that's all I have, guys. You guys are welcome to hang out, chit chat. Let me know if you need anything.
Hey, Kay.
Hey, what's up? What's up, JC?
Hey, Kate. Just quick, I put a chart up from the yield inversion that you guys talked about earlier.
Yeah. It's kind of windy on your end.
Basically, just saying that people are worried about the yield inversion and how long does it take before bad things happen afterwards, and just the history of when it happened.
Okay, I don't have your chart on, so yeah, I didn't get a message or anything.
I'll go ahead and put it on the chat line.
Okay. Yeah, thank you, Doris. I was trying to top my last discussion. I really enjoyed the last one that we had last week. That's good. So this is.
So these are the times where it inverted before in the yellow, and then what happened afterwards, and that's what people are worried about it. Every time it inverts, we get a recession in pink coming soon thereafter. And if you scroll down a little bit, it'll actually tell you how many months it usually takes for it to happen. It's like 7 months, 16 months, 9 months. So on an average, about 10 or 11 months after it inverts. So that's why people worry about it, because it's a really high predictor of recession.
Yeah. No, I agree. But then the game is also pretty cool. The game is also pretty cool. It's pretty windy on your side. And is it Daly City you're in? Okay, all right, guys. I'm pretty beat today, so let's call it. Feel free to hang out and let me know if you need anything. Fed has a finger on the yield curve. Yes, they definitely do. They definitely do. Because China and Russia were trying to sell treasury, which causes interest rates to rise on our end. Think about that.
Well, let's hope the fires get under control. Okay, see ya.
All right, Bernard. Thanks, man. Appreciate it. Pretty quiet today. What's all the energy or like? Maybe you guys party too hard with the Indian holidays.
And a lot of
TC2000. Oh yeah. I know. How's that? I mean, charting. How do you feel about charting at the end of the day? It's if you get deep into it, it's like quantitative trading. It's good for quantitative trading, but charts are charting it.
Computing is going down now. This might be like today's investment.
Today's investment, is it?
Doing something.
Oh, today? No, no, not me. This is what I mean. This is Halloween right here. For Netflix, do I go up or down? I mean, the recent news is pretty bad, right? About last week, and I think it's maybe lower. If you ask me, if it goes up, let's say over 280, then I think it could go up. If not, then I think maybe a little bit of decline. But the markets are kind of hard too. That's the hard part.
Like as that guy say, like 2 weeks ago, everything's like falling, and then suddenly, all of a sudden, everything's looking good.
Money printing came in. So how do I, like it was falling, but then they came and pulled it up. So I don't know.
So that's why I'm thinking that Pichot's level may not be as good as we expect because they are printing money. Stock market is going up. Even though we say when U.S. dollar devalued, then the gold or silver will
This is a
up.
good one.
Yeah.
That one was the one that we talked about. BlackBerry's kind of holding, right? Cloudera, I like. So yeah, these are looking attractive to me. It's just a matter of
Yeah.
really being patient. That's all.
And you know,
I can't force a trade.
how about the Tesla? You know, last time we talked about that, and I short it, and I got burned.
Oh well, I mean,
burned
so like I said, the Tesla surprise,
Yeah.
fundamentally, it looked very bad.
Yeah.
It was
and even the technical analysis is not good. You see, like before earning, the candlestick like two.
yeah. Technicals can't predict fundamentals,
Yeah.
right?
So what can we rely on then? Like fundamental is not good, and then the technical we look at.
Well, first of all, you should never play earnings. That's rule number one for me, unless it's a long-term hold. So something like Cloudera or Carbon Black or Pivotal, those are okay for me to do a long-term hold.
But Pivotal is no longer play. They already
Yeah,
acquired.
yeah. I wish I played that one. I played Carbon Black though. I was happy for that.
Oh, yeah. Everyone. I was not there.
Yeah,
at
you
that
weren't
time.
here. You
Otherwise,
weren't
did people like became millionaire after that?
Why if I bet bigger? No, I didn't bet big enough. It's always the betting size. That's why.
It jumped from what to what?
I forgot now.
Like few bucks and then like to 20?
Something like that. Yeah, I think it was like anywhere from 11 to 20.
Is it
10 to 20?
CRW, CM, which company? VMW?
VMware.
Oh, okay. You know, next week we have a lot of, FiI is one of the earnings
Yeah.
next week, and then Turiel,
Yeah.
TWIO, Turiel.
Yeah.
That one's also earning. And
I know. This is the hard part. The sky was falling previously, but now the skies are being held up. Software. I mean, if you want to be safe, I still think it's like industrials. But
like a Caterpillar or DE.
say again?
So when you're talking about industrial, are you talking about the Caterpillar or
Yeah. So if you don't know industrials, you could always go to.
the ETF?
Well, I'm trying to think of what do I want to show you here.
The XLI or something like that.
Here we go. Yeah. Okay, so here's industrials right here. So these would be industrials, right? This is to manage the bigger portfolio though, right?
And when you scan, what kind of parameter you will use? So like you
It depends on the goal. So I'll give you an example. If I'm scanning tech stocks, then I filter it by sector industry. If I'm scanning value, then I filter it by earnings positive, right? And then like appreciating value, then I do earnings growth. So scanning is an art that I don't talk about much anymore in here because I kind of just do it these days. If you want to find value stock, you could do under 2. This is relative value. If you want true value, so let's say under 2 there, and low PE, but then I want sales growth to be positive, and I want EPS growth this year also to be positive, right? And then also quarter over quarter also positive. Oh, positive low, just positive in general. So here's an example of potential below, low value. Maybe I could go even lower, just squeeze them. So here are value stocks right here, right? And then I'll pick the sectors I want to play. I'll range it by market cap. And I'll look at, okay, so now that I know these are value stocks, I don't want to do financials. I don't mind basic materials, so these are value stocks right here. So I don't know if I want to do China, let's say. I want USA. I'll add another filter, USA. USA, and then I don't want financials, but it's only so few. So these are value stocks, and I'll be looking at basic materials, so ENBL. So here, this might be a player here. So it's trading below book value, but it has too much debt. Oh, I forgot the debt. Let me go to debt. I want low debt. So now there's not that many. See, this is like me asking too much in the markets now. So if you want low debt, these are companies that have low debt, but they're all financials and services, which is not. I don't want to do banks. Right, so now it tells me I'm asking too much. So I gotta ease it up a little bit, because let's say if I want to do by sector, I do industrials, or I'll do custom, and then I'll do industrial, basic material, and let's do consumer goods. So this is a segment. So this is the only one I could play, VRS, in terms of this criteria. So what's going on with VRS? It's positive in earnings. Sales are kind of sideways. It's trading below book value. It's a cheaper $400 million company. So this is an example of a value stock, basically.
When you say trade under book value, how do you define that?
Book value is net assets minus liabilities.
Oh, how come you right away can tell?
How do you tell?
You right away can tell it's under book value.
So because it's below 1.
Anything below 1 then is.
Yeah, because I look at, here I could show you. So price to book value right here. Price to book value is current market price divided by total assets minus liabilities. So you take the current price, and so the net of this, the net of their balance sheet is below that price.
And normally it should be below, above 1 though. If below 1, normally it means indicates like below book value.
Yeah. So if you were to clean up the balance sheet and sell it, then it'd be worth higher. But the markets are beating it down. But as you can see, there aren't that many choices to choose from in terms of value, right? My scan is too aggressive, so now I have to maybe.
Then you pick up the most quality one then.
Yeah, you could say that, but it might not be quality as you think. Like if you ask me, I'm looking for oil and gas energy. So if I'm looking for oil and gas energy, then I'm looking at, I might have to expand this because it's too high. So I'll do under 5. So now I have more, right? So I have EPM evolution. So I'm bullish on oil and gas right now. So this might be a consideration. Wow, this is perfect. So no debt. Oh, but price to book is relatively high. Not as deep value as I want, but it's relative value. I might want to look at its, comparable industry peers. So that company was, let's see, EPM, right? So it's about 190 million. So it's very small. So that'd be down here, and then I'll go to valuation, and I'll kind of look at its peer in the 200 million. So it's EPM, this one right here. So then I'll look at the valuation relative to its peers. So price to sales, price to book, and even price to earnings. So EPM, 200 million, EPM, right here. So yeah, maybe it's priced kind of high, but you can use a calculator and average this out, and you kind of see the valuation. So now let's say now that I know EPM, and I know the valuation of where it's at, and I see the charts, and I have my theory on oil and gas. I know that dollar is getting cheaper, so it might help oil, but then there's a lot of supply being pushed into the markets as well. Maybe oil and gas might find a bottom, but they're cheap. And so that's why I'm playing the value side. It might not move immediately, but you could get like a 7% dividend for employees. So this might be a different model out there. Like it's like a royalties type of model. So meaning like hold on, I don't know what the model is. Independent oil and gas, thick margins. Yeah, I don't know what the model is. I have to go in and start reading about it. But that's how I scanned that. You want to see like a different scan, or that was a value scan?
Okay. So you go to the Finmix and then you pick the sector and
Yeah, so I could go that way too. I could go, let's say, industrial goods, and then everything. No, it's basic materials, and then I'll go to custom, and then I'll do everything oil and gas. I don't want to do refining, equipment services. So these are like very infrastructure services, and I could arrange it by market cap, or I could go by, let's see, start filtering out. Let's say I want the certain size of upwards to 5 billion, nothing, and then minimum of 1 billion, or 0.9. So these are the companies I want to invest in this size because I think they have upside. And now I'm thinking about like, okay, well, let's see, do I want undervalue or do I want growth? Like, like sales are growing. So I could go over here and look at, EPS, not EPS. EPS is too aggressive. So I'll do sales in the quarter. Where's the sales quarter? Average. Unless I don't have that. I thought I had that. Sales, maybe it's a different scanner.
yes, you have.
Oh, right here. Sales, yep, here you go. So I want positive, right? So these are the ones that are growing in sales. If I want value at this point, then I want EPS quarter over quarter as well to be positive. So here are ones that are low price but not undervalued. Now I look at valuation, and then I look at the most undervalued one, which is VAL, but I don't think I want to play that one. It's too undervalued. Like, why would it be 0.09? So I'll be looking at the ones closer to 1. So let's say FI right here. So FI might be a good example. It's 1 billion, still losing money. EPS growth is improved, but not better. No debt, 3,100 employees. The margin is pretty okay. Yeah, this is just a beat down security. So maybe it won't go up. Doesn't look like there's a growth story.
The one you say is perfect, that one like zero debt, that one, what's the ticker?
This one?
Is it this one? Zero debt? Can you take a look?
Zero debt, this one? This one has zero debt.
Oh, okay. No, but before you have one, you say, oh, this is perfect.
Yeah. Yeah, so I mean, these are commodities-based businesses, so their performance dependent on the price of oil.
Oh, yeah.
Right?
So you
Or
go
for pipelines, it'd probably be the demand for oil, so they'd be in business. But that's how I would identify opportunities. And this is like the dirty low end that no one's paying attention to. But, and this could get pretty dry too if I present this, like here. I don't think people would enjoy, hearing about all these boring ones, I guess.
So now you have a little bit switch your focus instead of like the precise metal. Now you're more focused.
Oh, I'm still in metals. I'm still focused in metals. It's just I'm still waiting. I'm still in position, right? It's not hurting me. It's not aggressively appreciating like it was because it has to take a break.
The PAS bounce back a lot. PAAS.
Yeah, it did. I mean, that's what we talked about earlier. It's break of the trend line right here. So silver might be back in play.
This one I got out and at a profit, a little bit profit because I waited too long. We bought like since September and then it's keep on sinking.
Yeah.
Now I'm so desperate to get out and whenever I make some little money. I know it will keep on fly to sky, but I don't want to wait. I want to switch the capital to do other things. Maybe buy the Netflix or.
These days I feel like I've taught so much and I traded quite a bit that I really just like long-term investing because it's like you could go live a life but know that you have your positions.
Yeah, that's true.
And you know that your positions are going to pay you if you're just patient. Mm-hmm. So I'm getting less emotional but less like this doesn't, how do I say it, like it doesn't
FOMO.
Yeah, I don't feel like I have FOMO at all.
Okay.
I don't feel like I'm missing out on anything anymore.
Okay.
I just feel like I'll just wait for the trade and make it, and then
have this good setup, then you
Yeah,
trigger.
yeah, like yeah, I feel like I don't feel like I'll take a position, right? Let's say I put $50,000 into a position. I don't feel like I'm gonna lose it. I could scale up with options. Yeah. Well, I'm just being patient and.
How about the silver? Do you get out already? The SLV?
No, I'm back in.
Oh, you back in?
Yeah,
Like when is it?
this week.
Oh.
Yeah, this week. Well, I want to trade it. I feel like silver could pop. So, but it's trading, right? So that's the thing about communicating in here. Like, are people asking me about trading or investing? Yeah.
Trading, I think people come here more.
More for trading, but trading is good, but like it's also like work too.
When you're talking about the Bitcoin, it's very like.
Yeah, he doesn't like it.
Yeah, different generation have to.
Yeah, it's very
Communicate, you know.
it's very different, but I
One day is a president, you know, is equal important as a Donald Trump.
yeah,
you know?
yeah. He reinforced Bitcoin, but he was talking about blockchain, which is the technology. But I know that when he announced that, he's already been positioned. He already bought whatever he can. He
Or
already
his son or his son-in-law, something like that. or
yeah,
bought it.
yeah. Smart, it's a super smart guy. I mean, they're all smart. They already know.
Otherwise, they cannot be that high position, right?
Yeah, yeah.
Okay. Thank you so much. You
Hey.
devote so much time to us.
No, you're welcome. This is also it's not it's good for me as well. Like I
So how was the yesterday's mix-up? Is it good?
about 60 to 70 people, so a lot of people.
Anyone of the here?
No, different.
No.
Yeah.
Oh, none
So
of here. None of.
yeah.
Hi, Gary.
Hey, doing good, man. You about to set up over here?
Uh-huh.
Yeah.
Did you finish?
Yeah, I finished. I'm about to clean up and.
What do you talk about?
I talk about investments,
Oh, good.
everything.
Wow.
Yeah.
I like it. I like chart.
Oh, you like charts and stuff
I
too?
like charts very much.
Yeah. So we were talking about. We were looking at some gold charts today and stuff like that, like the devaluation of the dollar, and so.
Oh, wow.
Yeah, like where do you run to at that point? So I could show you just a little sample.
Oh, the Bitcoin.
Yeah, we talk about Bitcoin as well,
Uh-huh.
some earnings and stuff. But the main ones we talked about was down here. Oh, I forgot to stop recording, so let me stop this.